All right, family. Today is Wednesday, September 20th. We are here for the first day of our basic free smart money boot camp. Man, shout out to everybody that took the time out to come fuck with me for these 3 days. Shout out to everybody that trusted with me. You feel what I'm saying? I know a lot of y'all follow me on Instagram or know me through just trading in general. You feel what I'm saying? The Forex community. And a lot of y'all have been watching me through social media, whatever the case is, and just been kind of interested in what we got going on, but never got put in front of the right information to get started. This is what this boot camp is for. You know what I'm saying? Like I was saying earlier, this information is 100% free. You know what I'm saying? Everything that I'm going to put y'all on this boot camp is 100% free, even when it's over with. I'm going to put y'all on exactly where I learned how to trade from start to finish. You know what I'm saying? Everything that I'm putting y'all on is free. You know what I'm saying? I feel like nobody should be charged for, at least once again, being put in front of basic information and getting everybody in position to at least start taking advantage of what the foreign exchange market has to offer. You know what I'm saying? So y'all like my boot? Y'all like my thing? You know what I'm saying? I made this by myself right here. Y'all see, you know what I mean? See, we got a little logo down over here in the corner. You know what I mean? And me, I did that, all right? Okay. Well, so y'all ready to start trading Forex. All right. This is a quick introductory to the foreign exchange market. All right. Like I said at the beginning of the call, I advise everybody to have a notebook out. You feel what I'm saying? Especially if you're one of the brand new traders. You feel what I'm saying? If you are brand new to Forex, I heavily advise you to have a notebook out. I'm going to be giving y'all definitions, and I'm going to give y'all a lot of stuff y'all need to write down as far as sessions, terminology and stuff like that. You know what I mean? You need to understand these certain terms as we go along in the boot camp, so you won't be confused. Okay, so make sure that you have a notebook out and you are ready to take notes. All right. If you have any questions, comments, or concerns as I'm going by all means, either drop it in the chat, or there is a function on here where you can raise your hand like that. You know what I'm saying? If you just raise your hand, I'll stop what I'm doing and holler at you and see what your question is. Don't be scared to ask any questions. That's the whole reason why we're here. All right. Before we even get started, I want to go ahead and introduce myself to anybody that does not know who I am. It's your first time seeing my face. My name is Tracy Esco. All right, I'm a 25-year-old Forex trader. I primarily trade currency pairs. I've been trading for 4 years now. I got started in 2019 with IML. You know what I mean? I know majority of people that are on this call that have actually have experience with trading got started through the same company. So I got started with IML. Just give you a little background on like where I came from. I don't mean to keep saying but it's something I forgot. I want to give y'all the main story, who I am and where I came from. Okay, so before all this Forex stuff, I was a felon. I just came home from prison. And the majority of y'all know the story. Y'all seen it on my Instagram. But I just came home from prison in 2019. I was still doing crash dummy stuff. I was on probation for 6 years. You feel what I'm saying? But when I came home from prison, I tried to figure out another route. And that's when somebody DM'd me with the IML opportunity. You know what I'm saying? When somebody came to me with the opportunity to make money from wherever you at, whenever you at, you know what I'm saying? I ain't have no choice but to try and take advantage and at least learn. You know what I'm saying? It did come with trial and tribulations. But at the end of the day, getting put in front of this information created who the man that y'all see today. You feel what I'm saying? So I got started at IML, stayed in there for about 3 months. You know what I mean? I'm gonna go over the thing with IML and why the foreign exchange market has a bad name in general. So I'll go over that a little bit deeper a little bit later on. But I left that company once I figured out everything wasn't genuine. I came across some life changing information with the foreign exchange market. Everybody that's already a trader on here knows about ICT smart money. I studied that for about 3 months on YouTube, came back and did this right here. 1 second. Did this right here. All right, this is my biggest withdrawal up to date. All right, this is my life-changing withdrawal right here from 2 years ago. All right, 17K. All right, back from Hanko, back when we was fucking with Hanko. You feel what I'm saying? This was off of a Bitcoin trade. This is in one weekend. You feel what I'm saying? So I was able to take Bitcoin, sell that motherfucker, run up 17K, withdrew that. You feel what I'm saying? Funded up another 500, was able to turn that into another 2K. You feel what I'm saying? So from this day forward, it's been up. This when I started teaching everybody, you feel what I'm saying, putting the people in front of the same information that I was put in front of. And it's been 2 years since then. You feel what I'm saying? I created certified snipers, been putting everybody in front of the same information I have, and pretty much been changing lives, just like how smart money changed my life. It's how the foreign exchange market changed my life. You know what I'm saying? So 2 years ago, this actually helped my mom get my mom out of debt. You feel what I'm saying? A little more background. I was staying in Tennessee at the time. You feel what I'm saying? My mom was out there. She had opened up a business there in COVID. and the business flopped because of COVID, and she ended up going in debt 20K. I was able to get this right here. You know what I'm saying? And get 17K, get her out of debt. Moving back to North Carolina. Now I'm back here too. You know what I'm saying? So that's my little background on where I came from, and how I got started with trading, my biggest day, and you know, who I am today. You know what I'm saying? I also wanted to take this time out for anybody that's already a trader, you know what I'm saying, that also has any testimonies when it comes to trading, you know what I mean? If trading ever changed any of y'all lives, you know what I'm saying, and you want to share your story as well, just so the people that's brand new with Forex can understand that as long as you take the time out to learn this skill set, it is life changing. You know what I'm saying? I haven't worked no job in 3 years because of this. So if anybody would like to share their testimony when it comes to trading, by all means, now would be the time. So I'm gonna mute your mic and just let people know how trading changed your life.
All right, I'd like to go first. I am a trader. I've been trading for roughly about 4 years now. August 15th, actually made 4 years. If y'all don't know, my name is Gundy. On Instagram, it is Saint_Gundy. I've been rocking with homie for a little minute now, for a couple of months now, checking out his work and stuff like that. Despite I know how to trade, doesn't mean you can always improve. So I decided to tap in with me to get more knowledge and sharpen my skills. Because despite you think you may know everything, the market will damn sure fool you, make you think otherwise. So in doing so, it's always good to continue to improve and sharpen your skills. With that being said, trading did change my life. The guy who put me onto my first car actually brought me to IML. I was there for a month. Didn't learn anything, didn't gain anything, so I decided to just self-talk. So everything I learned was from YouTube. But obviously, you definitely going to need a mentor, somebody that can hold you accountable for your actions and teach you the little things that YouTube is not going to teach you. There's different ways of learning first off. So first is seeing it for yourself, and then experiencing it, hearing somebody tell you and reading up on it. So everybody had different learning skills, so you're not going to be able to learn properly from YouTube. With that being said, my first withdrawal roughly around $5,600. From that moment, I knew I needed to start trading only. So I decided to do it full time. I sacrificed my job. I won't say put my kids to the side, but I did take a little bit of time away from my kids so my mother can focus. My mother of my children can focus on them a little bit more as I go ahead and chase my dreams. So that way I go ahead and take care of everybody. I went homeless behind trading and everything, and I bounced back due to trading because I finally understood what it really was. So with that being said, that's my testimony, and trading can change your life. You really take the time to learn the skill. Please don't go off of counting pips and how much this guy made, how much that made. You learn the skill, you can make money anytime, anywhere of the week. That's my testimony.
Oh, bro, I appreciate it, bro. That's real shit too. You know what I'm saying? Like a lot of people has that background when it comes to it. Me and him relate a lot. You know what I'm saying? When it comes to like risking everything to learn how to do this shit. You know what I'm saying? I was homeless as hell, just like bro. You know what I'm saying? I was risking my rent money for this shit. You do what I'm saying? And then losing that shit in the market, getting kicked out of cribs and shit. You know what I'm saying? For those that stay in North Carolina, Durham, I know MacDougal and shit like that. I was bouncing from MacDougal to goddamn. You feel what I'm saying? Fayetteville Street right there by goddamn Linwood and shit. You feel what I'm saying? I was in every single room and house. You feel what I'm saying? On some broke shit, trying to figure out how these markets go. You feel what I'm saying? And getting kicked out, punching holes in my wall. I would say that learning how to trade, you feel what I'm saying? Because it is hard. You know what I mean? Let's not get none of this confused. It's very hard once you're trying to figure everything out. Once it clicks, it clicks. You feel what I'm saying? It ain't no turning back. You do what I'm saying? But this was some of the most stressful times of my life. You do what I'm saying? Trying to figure out how this market works, how to make consistent money out of it. But like I said, once it clicked for sure. So great testimony, bro. I appreciate you got them sharing that, gang. Anybody else like to share? I'm gonna shut up talking. I'm gonna let y'all share if anybody else wants to share. All y'all traders on here, don't sit here and cap to me, man. Okay, you too, nigga. You sitting there laughing.
I'll go ahead and a little testimony, you know what I'm saying? So, well, let me cut my camera on. But yeah, so I'm gonna be honest, my name Courtney. I'm from Arkansas. And I actually started my trading journey with IML, you know what I'm saying? I jump ship with them in like 2020. And then I was real profitable in the market, you know what I'm saying? I ain't gonna say it was I had like $1,000 days or whatnot, but I didn't seen enough to where I withdrew and paid bills with it. So at that point, you know what I'm saying, it was like, okay, this shit actually real. You can withdraw from the market. My phone. Rent one time, you know, and I paid my car note. So I was like, okay, can do this even if you really just working, you know. And this could be something that you on the side to just pay, small bills with, and then you got your actual job for the big bills.
Mm-hmm.
So I was like, okay, this shit pretty tough, you know what I'm saying? So after I had a little situation with IML and then, end up leaving or whatnot, so I've been like independent. But you know what I'm saying? That don't mean that I'm just the smartest guy in the room. You know what I'm saying? I'm always finding ways to connect with different people. And then I don't know how, I forgot how I came across you, but it was really just through meeting different traders. You know what I'm saying? Then I came across your page, I came across your group, and but I was like, okay, bro, consistent. You know what I'm saying? It was something different about the way you teach and the way that you trade compared to everybody else. That's what really made me stay. So that's where I'm at right now, though.
Oh, bro, I appreciate that, gang. You know what I mean?
Oh.
You know what I mean? Yeah. I try and pride myself in breaking this shit down to layman terms. You feel what I'm saying? So you know what I mean? That it means a lot.
Cap.
You know
And
what I
no
mean?
cap, you do just that. You know what I'm saying? I done hopped on like two calls within the past couple of weeks or whatnot. And hey, you break this shit down, bro, for real. So I give your props on that.
Word, bro. I appreciate that, gang. No cap, I really do. It means a lot, bro. Y'all gotta understand that y'all are my goddamn, you feel what I'm saying? Y'all the reason why I wake up in the morning, but this shit ain't for me no more. You feel what I'm saying? Like when I say I'm one of the ones that are truly, truly passionate about Forex, you feel what I'm saying? I mean that I wouldn't have made this 3-day boot camp for free for no reason. You know what I'm saying? Like I truly, truly, truly passionate about putting people in the same situation that I was in. You feel what I'm saying? And trying to avoid the curves that I had. You feel what I'm saying? Avoid all the mistakes that I had to make. But I promise you it won't take no goddamn 2 years to goddamn become profitable. You're in front of the right information. You're put in front of the right person. You do what I'm saying? This is not me advertising myself or anything like that, because once again, I'm going to put you all in front of the right information for free. Boot camp's over with. I'm gonna show you exactly where I learned everything from. So this is not me advertising myself. It's just a testimony to understanding that if I would have been put in front of this same information I'm going to put in front of y'all at the beginning of my trading career, y'all would have seen me doing all the shit that I'm doing goddamn 3-4 years ago. You know what I'm saying? Trips to Miami and all that stupid ass shit. Like y'all would have seen me doing that shit years ago. I'd be rich as hell right now. You know what I'm saying? The market is not hard to understand at all. You feel what I'm saying? But beginners, it may be confusing, it may be intimidating. You know what I'm saying? Does anybody else want to share anything? You feel what I'm saying? Before we go ahead and kick the shit off. For sure. But that's all good. Majority on here is to learn. You do what I'm saying? So I appreciate everybody that took their time out to share their testimonies. Man, I can go on for days when it comes to testimonials, man. Like this shit changed my life. But I ain't finna keep hearing shit talking y'all head off. We're finna go ahead and get started. Drop a 1 in the chat if you thought that Forex was a scam. All right. Drop a 1 in the chat if you thought Forex was a scam. You do what I'm saying? I just want to know real quick. Drop a 2 in the chat if you always knew that it was if you always knew it was real. I see the 2 coop. I see the 2 coop. I see the 1, least. Damn. Well, I want participation if y'all don't mind, man. Can everybody let me know what time it is? Twos. And I'm talking about when people first started, when people first started posting this Forex shit. Not now. You do what I'm saying? But when this Forex shit first started coming around, you thought the shit was a scam or you knew what's up with the twos. I see the twos for sure. Everybody knew that the foreign exchange market was real. You know what I'm saying? But at the same time, was just put in front of the wrong damn information. You know what I'm saying? That's why we're here today. I just wanted to get a consensus of who I'm dealing with. All right, let's go ahead and get this thing started. Told y'all my turning point. This is my turning point. Go ahead and keep it pushing, man. All right. So this is what we're going over today, y'all. All right, this is what we're going over today. We're going to be touching on what is Forex, the basic of Forex. You feel what I'm saying? Why does Forex have a bad name? You know, everybody, when people hear the foreign exchange market, they automatically think, you know what I mean, gamble or scam. You do what I'm saying? Of course, not y'all, but this is what the majority thinks. This is why when you start talking about trading to people, they start looking at you like you fucking crazy. You know what I'm saying? So we're going to go over why this shit has a bad name. I'm going to give y'all some terminology that we all need to understand going forward in this boot camp. You know what I'm saying? So I want everybody to have their notebooks out, writing this shit down. You feel what I'm saying? I want to go over why you should trade Forex as opposed to other markets. You feel what I'm saying? We're going to go over major, minor, and exotic pairs, and different type of pairs that you can trade, the people that you're trading against, different market participants, and then we'll end it off with the different sessions, you know what I'm saying, that you can trade. So once again, today isn't going to be too much chart work. We're going to slide into that chart work tomorrow. This is just an introductory to what we got going on. You know what I'm saying? Yeah, 2 even. Yeah, facts for sure. I bet. Apps you need. You feel what I'm saying? So this isn't, you already got, first of all, I need to download MetaTrader 5. You know what I'm saying? MetaTrader 5 is the app that we use to make the money on. Y'all be seeing me posting my story, the blue screens. You feel what I'm saying? Or y'all be seeing charts and my entries and stuff like that. This is the app that we use right here. So y'all go to y'all app stores, y'all download MetaTrader 5. Y'all just start playing with it. You feel what I'm saying? Y'all gonna see me go a little bit deeper into MetaTrader 5 tomorrow. You feel what I'm saying? As far as teaching y'all how to work it, creating everybody a demo account or whatnot. You feel what I'm saying? But I want everybody to just go ahead and download the app and go ahead, you know what I mean, just start getting accustomed to it, going through it, see the different shit that you can play with, buy shit, sell shit. You feel what I'm saying? Just start getting accustomed to that app. You know what I mean? Trading View. All right, your Trading View is mandatory when it comes to trading. All right, this is either a website or an app. You feel what I'm saying? But Trading View is a necessity. I'm going to show y'all Trading View in a second. But Trading View is the website or app we use to look at price, to analyze price. Okay, we mark up our charts. Y'all may see me post sometimes, you know what I mean, a chart and it got hella lines and rectangles and shit on it. That's all on Trading View. You feel what I'm saying? That's the app that we use to look at price, analyze price, and eventually make our money. All right. Telegram, all y'all already got Telegram, of course, and everybody already has on. You know what I'm saying? We good on that. All right. Just go ahead and get MetaTrader 5 locked in on y'all phones. All right. We're going to touch deeper into MetaTrader 5 tomorrow. Okay. What is Forex, y'all? What is Forex? You feel what I'm saying? First things first, Forex is short for the foreign exchange market. I know a lot of people think that Forex is like, you know what I mean? I know some people thought that Forex was directly tied to like these companies, you feel what I'm saying, that was promoting Forex. I know a lot of people that thinks that, you feel what I'm saying? That is not the case. If you did not know, Forex is literally just short for the foreign exchange market. That's what it stands for, okay? Forex is the global financial market that allows us to trade different currencies, okay? This is the biggest financial market in the world, as y'all can see right here. The largest financial market in the world, $6.6 trillion circulating through this market every single day. What does that mean? There's no cap to how much money you can make within a day, literally. You know what I'm saying? But there's also no cap to how much money you can lose within the day, too. So you're always going to keep that in the back of your mind with trading. You know what I'm saying? And just to give you an example or give you like a comparison, you know what I'm saying? To understanding that this is the largest exchange in the world. The New York Stock Exchange only circulates 200 billion. Y'all know that's one of the most well-known stock exchanges, if not the most well-known. That only circulates $200 billion a day. We're trading the foreign exchange market, 6.6 trillion. You know what I'm saying? So everybody's participating in this market. You dig what I'm saying? If you ever been out of the country and had to exchange US dollar for another currency before, you participated in the foreign exchange market before and you probably didn't even know it. Okay. So if you ever traveled to like, say for example, we go to Canada, you feel what I'm saying? Say for example, me and you go on a trip to Canada, right? And when we get to Canada, we both got $1,000, right? We go on a trip, we like, yeah, we're gonna take $1,000, right? We get to Canada, of course, when we get to Canada, they don't take US dollars, right? They take what's called the Canadian dollar. Okay. So when you get to Canada, you would have to exchange your US dollar for Canadian dollars, right? You know what I'm saying? So you'll get to Canada, you'll go to the foreign exchange booth, right? You exchange for your 1,000 US dollars for your 1,000 Canadian dollars, right? I say, for example, I'm like, shit, you can keep your $1,000 the whole time. Whole trip on me. You know what I'm saying? So now you come back to the US dollar. You come back to the United States with your Canadian dollar, right? You got 1,000 Canadian dollars, and you go up to the foreign exchange booth. You're like, yeah, I'm gonna go ahead and exchange this for my dollars. Can I get US dollars back? Instead of them giving you a band back, they give you like 1,200. You feel what I'm saying? You're like, damn, I only gave you $1,000, but you gotta understand the value of one currency was higher than the other, which gave you a fluctuation that ended up giving you profit. You feel what I'm saying? You ever heard a lot of people or a lot of old heads that hold on to like real foreign dollars, you feel what I'm saying? Or like foreign coins. They'll be like, I'm gonna hold on to this shit, man. This shit gonna be worth something one day. You feel what I'm saying? That's what Forex is in essence. They're just doing it physically. You feel what I'm saying? We're doing it everything electronically. Everything that you see as far as like people owning different currencies, a lot of people own like, you know what I mean, dollars from like the Iraq or shit like that. You feel what I'm saying? Just like different currencies from around the world. A lot of people travel. They got a notebook full of different currencies. They're keeping that for a reason. You know what I'm saying? Because they understand that one day it could be worth a lot of money if the value of these currencies fluctuate in the right way. You know what I mean? Exchange rates for currencies constantly fluctuate, allowing us as traders to make money. Okay. So essentially, us is what we do as Forex traders, which I'm gonna get a little bit deeper as we get into the boot camp. But what we do as Forex traders is trade one currency against another. And the understanding that every single country has a currency, right? Like we have the US dollar, um as I said earlier, Canada has the Canadian dollar, Japan has the Japanese yen, Europe has the euro, right? Mexico has the peso, you feel what I'm saying? Every single country has a different currency, right? And the value of these currencies fluctuate each and every day, like shoes or whatever the fuck. You feel what I'm saying? Or like the value of the PlayStation 5. Remember when the PlayStation 5 came out and that shit was like $1,000? You feel what I'm saying? Plus because it was so hard to find. But now that it's starting to get a little bit more easier to find, the price is starting to go down. Shit like that. You know what I'm saying? Shit fluctuates. The value of things fluctuate all day, every day. Us as traders are able to profit off the fluctuation of price. Okay. Understand that the market is open 23 hours a day, 5 days a week. That's why if y'all follow me on Instagram, I don't see nothing but trading shit on my story because I'm always trying to find a way to make money. You feel what I'm saying? When us traders say that we're making money all day, every day, don't matter where we at, don't matter what time it is, dead ass. You know what I'm saying? Now, we're going to go over the different times and whatnot and why different times are more important than others. But understanding that you can make money all day, every day trading this market. You feel what I'm saying? 5 days a week, 23 hours a day. Okay. The market closes for 1 hour every single day, opens right back up. And the market closes on the weekends. Okay. The market closes on Friday at 5 o'clock and opens back up on Sunday at 6 o'clock. Okay. Stock and then understanding the difference between the foreign exchange market and like stocks and bonds markets. I know a lot of people on here do options. You feel what I'm saying? All their markets close at the end of the day. You feel what I'm saying? Like 5 o'clock, the market's closed. And you gotta wait until 8 o'clock the next day to be able to trade all over again. Versus the foreign exchange market, 23 hours a day, constant fluctuation with price, constant opportunities to make money. Okay, unlimited opportunities to make money. You know what I'm saying? Let's go over why Forex has a bad name. All right. I love stories like this because I know a lot of people that are on this call can relate, if not everybody on this call. Even if you don't know anything about trading, you got introduced to trading by somebody that was a part of a company. Okay. So why the foreign exchange market has a bad name? Why do people think that Forex is a gamble? Family, drop a one in the chat if somebody's ever slid in your DM asking you to get on a Zoom call talking about some shit. Drop a one in the chat if somebody's ever slid in. Drop a one in the chat if somebody's ever slid in your DM. Somebody underline that shit. Drop a one in the chat if somebody ever slid in your DM like, hey, can I put you on a new opportunity to make money? You know what I'm saying? And this is very, very, very strong in 2018, 2019. You know what I mean? Drop a one in the chat if you ever seen hella people like just being in groups of people and shit. You feel like big ass penthouses and shit, and everybody got their cameras out and everybody hearing ranks and shit like that. And they just making everything seem like the foreign exchange market just the easiest thing in the world. You know what I mean? Only 3 people have been introduced to Forex by somebody. You know what I mean? That slid in somebody DM on some crazy shit. That's exactly how I got introduced to foreign exchange market. That's even happening today. You know what I mean? There's a new company out called One House. Okay. But going back over the wave that came out in 2018, 2019, this company, there's plenty of companies that came out, but the main one was called IML. This is the one that y'all just heard everybody talking about earlier. Okay. IML was a company that advertised trading, right, as their main source of income. Okay. So they went and got a lot of traders that were already 6 or 7 figure traders, and they used those people as educators, right? And then they started to use their platform and advertise those traders' success, right? And started to be on some shit like, oh, we can teach you how to do this, like we making money overnight type shit. Like this is real easy. Like just pay this monthly bill, right? And we'll teach you how to trade. You know what I mean? So people like me that view that as a golden opportunity, we went ahead and paid these monthly bills. You know what I mean? And we went ahead and joined these companies. And although it did give out basic Forex information, like how I'm about to put y'all in front of, you feel what I'm saying? It did give out the blueprint to go ahead and learn how to start trading. That company was not based on trading. You feel what I'm saying? They advertised it, but in our actuality, that company was based on some pyramid scheme shit. It's called an MLM. Okay. So they had everybody recruiting people. You feel what I'm saying? The more people that you can recruit into this business, the more money that you can make. You feel what I'm saying? So a lot of people view the recruiting aspect of the company as way easier than actually trading. You feel what I'm saying? So now you got a group full of motherfuckers that, you know what I mean, act like they know, act like they know how to trade, but they don't. Act like they know something about Forex when they don't, just to get y'all to, you know what I mean, join the company. And then people will join the company, figure out that it's not what it seems, and then they leave the shit and incorporate Forex with that company. You do what I'm saying? So you had a whole bunch, you had a big ass company with like millions of people in that motherfucker, bro. Like that was the biggest Forex company that ever dropped. You do what I'm saying? Now they're trying to duplicate it with a company called One House, right? But these MLM companies will come out and they will advertise the foreign exchange market as their main source of income, because you got to understand, like, everybody and their mama wants to, if they don't want to trade, they need to know something about it. You feel what I'm saying? Like everybody has came to that point where they're like, damn, somebody's trading. I need to learn a little bit more about that. You feel what I'm saying? So they'll throw, you know what I mean, people that's already rich, they in nice cars and shit. They in, you know what I mean, Dubai and all types of crazy ass shit and acting like it's off from trading when it wasn't. You know what I'm saying? And they got all these people to join this company and start recruiting. And that just turned into a domino effect of people joining the company and then figuring out that people don't know how to trade, figuring out that it's all based on recruiting, you know what I mean? And then they'll leave the shit and incorporate Forex with recruiting. Understanding that, please understand that the foreign exchange market has literally zero to do with these companies that are coming out promoting it. The foreign exchange market is 100% real. If you don't know, please do your research. You dig what I'm saying? These companies will try to come out and they will try to advertise the foreign exchange market as their main source of income to get you to join and pay a monthly bill behind it. You feel what I'm saying? And once you join this company, you figure out that they don't know shit about trading and everything's based on recruiting. You know what I'm saying? Or maybe they do know something about trading. And they may have some people that are successful in the foreign exchange market that'll teach you. You'll never have access to them. There's got them thousands and thousands of people on their call. You'll never get a one-on-one. You'll never get to ask them questions. You know what I'm saying? You kind of end up stuck in your own little ballpark, and you kind of got to figure it out for yourself. You know what I'm saying? So my whole thing was, if I got to figure it out for myself, I'm like, why the fuck am I paying a monthly bill? I'm gonna go figure it out by myself. By myself. I'm saying, but understand that these companies will come out. There's another one that just came out called One House. You feel what I'm saying? I don't know if anybody's in here is connected to One House. You feel what I'm saying? If so, my apologies, but I'm just putting people on game. You know what I'm saying? One House is another company that just came out. You feel what I'm saying? And they are also advertising the foreign exchange market as one of their sources of income. The only difference between One House and IML is One House is actually advertising more than Forex. All right, they got Forex and they got real estate and they got, you know what I mean, e-commerce and all types of crazy ass shit. You feel what I'm saying? So I'm not. This is no knock on these companies, because once again, these companies are the one that put us in front of the information to actually pursue trading. But these companies don't actually have the true information that you need to become successful. What they do is they dab a little bit of shit in front of you. You feel what I'm saying? So that you can stay dependent on them, so you can keep paying a monthly bill. They'll never put you on through game. They want you to stay dependent. You know what I'm saying? So stay weary of companies like this and people that are trying to DM you to get you in front of the opportunity. Family, everybody on this call know I ain't never DM none of y'all unless we talk about 2018, 2019 when I was at IML. Everybody that's on this call is on here 100% because you want to be, and not because I DM'd you and told you to get on here. You feel what I'm saying? So when you have somebody that's DMing your phone or DM your Instagram or texting you like, hey, you feel what I'm saying? I'm trying to put you on game with this Forex shit, da 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 da. They try to put you on a Zoom call, understanding they about to put you in front of some bullshit. You know what I'm saying? That's on you to take that. All right. And you got social media, residual income, trade house. Yep. Yeah, I was a part of trade house for shit show. I was definitely a part of trade house. I went P150 and IML. That's about as much as I got. I was telling people about foreign exchange market. I didn't know shit about Forex. So niggas started asking me for my profits and shit. I'm like, I gotta show them other niggas shit. You know what I'm saying? Because I didn't know shit about Forex. Tell a nigga to ask me about my profits now. You know what I'm saying? I gotta show you that every week. No cap. All right. Social media, okay? Don't put me in this, you feel what I'm saying? Because I know that this may sound, you know what I mean? This may sound like I'm talking about myself, but I'm really not, you know what I'm saying? Because everybody on this call should already know about my body by now when it comes to this Forex shit. And if you don't, you'll know by the end of this boot camp. You do what I'm saying? But social media is also another reason why the foreign exchange market has a bad name, because you have people that are actually on social media, you feel what I'm saying, and advertising profits, advertising that they're doing this, that, and the third, when the money isn't actually coming from the foreign exchange market, right? You have some people that are on social media acting like like Forex is the easiest shit in the world. You feel what I'm saying? Y'all got people that's on here like, just tap in with me, I'll show you how to make money overnight type shit. And you got people that are literally like scammers and shit, or get money niggas working 9 to 5s and taking their paychecks and acting like it's from the foreign exchange market just to get people to, you know what I mean, paying for monthlies and shit. You feel what I'm saying? And I know a lot of people on this call have dealt with people where they paid them monthlies. It's because on social media it looks good, and you start getting behind them, and they can't make you a dime. You know what I'm saying? That's how it goes when it comes with this Forex shit. This foreign exchange market is a gold mine for scammers. You feel what I'm saying? Because when it comes to opportunity to make money from your phone, there's a lot of people that wants to take advantage. There's a lot of people that wants to learn how to invest. I mean, what happened when the pandemic hit? Drop a one in the chat when the pandemic hit the first time you were jobless. Drop a one in the chat when COVID hit the first time you was jobless. You got laid off. I dropped my one in the chat. I was done for when COVID hit. Gang, COVID hit, boy, it was a wrap. No job for me. Gang. All right, everybody still had a job during COVID. Or I understand that a lot of people didn't have a job during COVID. You know what I'm saying? Majority of motherfuckers got their shit shut down. And when COVID hit, a lot of people was dependent on what? Government. You do what I'm saying? They was dependent on those weekly checks they was giving out, unemployment, pandemic release. I can talk my shit because I was one of them. You know what I'm saying? I was definitely was paying me $800 a week. You know what I'm saying? So I was starting to become dependent on that shit. You know what I'm saying? But saying all that to say that when shit like this happens, you have to have a way to make money from your phone, family. You have to. No matter if that's trading, no matter if that's some other source of income from your phone, like e-commerce or whatever the case is, I have to have a way to make money from your phone because when this shit shut down, it's gonna be worse than the first time. You know what I'm saying? And you don't want to be one of those people that your job just automatically lays you off and you have no source of income at all. You know what I'm saying? But social media is another reason why people think that trading is a wrap. You feel what I'm saying? Because people get on there acting like it's easy when it's not. You feel what I'm saying? That's why y'all always see me post on my shit like, bro, this shit ain't easy. You feel what I'm saying? But once you get there or you deal with somebody like me, you feel what I'm saying? It's gonna be easy. You know what I mean? Like, I don't even mean to toot my own horn, but it's all about who you put yourself in front of and the information that you put yourself in front of. You do what I'm saying? Remember, network is network. You do what I'm saying? You put yourself in front of the right information, in front of the right people, and if that's me or the source that I'm going to put y'all in front of at the end of this call. You know what I mean? That's when it becomes easy. You got to put the work in first. Don't believe nobody that's trying to tell you that this shit is easy as fuck because it's not. You do what I'm saying? I make consistent money, but I still fuck up. You do what I'm saying? Because it ain't easy, bro. You do what I'm saying? I still fuck up all the time. You just got to know how to recover your losses. You know what I'm saying? Then you got gamblers. All right, these motherfuckers that come in here, goddamn, looking at my shit, right? People will look at my story. I know this because I've seen it. In the whole 3 years of me teaching this shit, 3-4 years of teaching this shit, and me advertising certified snipers and posting my profits and doing what I do, I always have people, you feel what I'm saying, that think that because I posted a certain way or because certain people posted a certain way, they think that is easy as fuck. So then they go fund up $1,000, $2,000, $5,000, and put that shit on the line, all on one trade. Lose that shit. Oh, Forex fake. Oh, Forex. Oh, this shit a gamble. Y'all gotta understand, bro. Everything is analyzed. You know what I'm saying? Everything is calculated. Everything has risk management behind it. This shit ain't just no gambling shit. You know what I'm saying? Everything that we do is 100% precise and calculated. You know what I'm saying? But you got gamblers that come in here thinking that shit's sweet, bro. When it's not. I'm telling y'all right now, this market is not sweet, bro. You don't know what the fuck you doing. She gonna take everything you know, everything you goddamn earned. She's gone. You do what I'm saying? Everything that you own, bro, is over with. You know what I'm saying? If you don't manage your shit wisely and actually take the time out to learn this market the right way, please do not end up like the majority. You feel what I'm saying? When it comes to y'all being on this call and actually being put in front of the foreign exchange market information, that automatically puts you in the 3% of the world. 97% of the 97% of the world don't give a fuck about this market, don't know shit about it. You know what I'm saying? Or are too scared to even dibble and dab in this shit. You feel what I'm saying? You got a 3% of the world that's actually looking at the shit. Out of the 3% of the world, guess how many succeed? Guess how many succeed? Out of the 3% of the world that's trading in this foreign exchange market, guess how many succeed? Drop it in the chat, man.
1%.
1% dog.
And my boy preaching right now.
Come on, bro. You do what I'm saying? Saying that to say, bro, when you coming in this shit, you trying to learn this shit, don't be a gambler, bro. because you will end up like 99, bro. I promise you that. Oh, you feel what I'm saying? That's why, you know what I mean? A lot of people are still trying to find their way with trading, bro. It's not going to be no overnight shit, bro. I've been trading for 5 years now, and I found my profitability 2 years ago. So I went through 3 years of literally bullshit, bro. You dig what I'm saying? Like a losing, just to gain it back, bro. You dig what I'm saying? But when I say it was all worth it, it was all worth it. Saying all that to say, do not be a gambler, bro. Take your time out. If you want to learn this market, you know what I'm saying? If you want to become an independent trader, turn that phone into an ATM, literally, then take the time out to learn it. Treat this shit as if it was a 9 to 5 if you wanted to replace it. You know what I'm saying? Anything that you ever did in life, whatever y'all are talented in, I got people on this call that are talented in clothes. You know what I'm saying? I got people that are talented in music. I got people that are talented in art. Whatever you are talented in, it took time for you to learn that shit, did it not? That shit just didn't come to you. You know what I'm saying? And even if you did got a little ear for art, ear for music, you still had to learn how to draw some shit. Still had to learn how to record some shit. Got my boy Benji on here. You damn sure had to learn how to print that shirt. You had to learn how to print though. You feel what I'm saying? You had to put yourself in front of that information to learn how to do that shit.
Preach.
You feel what I'm
Preach,
saying?
bro.
Everything that you do, you dig what I'm saying? It takes time to learn. Treat this shit the same way, bro. Don't let that money switch, goddamn, change you up, bro. Just because it's a $6.6 trillion market, don't let that rush you into trying to make $6.6 trillion, bro. You dig what I'm saying? A lot of people take that money and be like, oh shit, let me rush into it so I can hurry up and make some money. Oh, ass is grass, gang. 99% straight like that. You do what I'm saying? Before I keep pushing, man, drop a one in the chat if you still with me. If you still locked in right now, if you like everything here so far, man, drop a one in the chat, man. Let me know we still locked in. Before I go into the next slide, man. Okay. I don't want to sit here talking to myself, man. If you've been on my calls before, you know. I need majority of the call to drop a one in the chat. Don't sit me in here. Have me sitting in here acting like I'm talking to myself. I appreciate it. On the guys. I see some of y'all smoking, man. Can I smoke with you? Y'all gotta understand, bro. I myself don't think that trading. You know, that's another thing about trading, bro. A lot of motherfuckers be on here bougie as hell, bro. You dig what I'm saying? Like suit and tie. You dig what I'm saying? A million different screens up and shit. Like, bro, fuck out of here. Trading. Listen, don't let that social media shit fool you. That's coming back to social media shit. Do not let that shit fool you, bro. Trading is not all that, bro. You know what I'm saying? Y'all see me doing this shit off my phone, off my laptop. I don't got no 3, 4 screens up. I'm smoking the gas for my people that smoke. I might take a couple shots while I'm got them. You feel what I'm saying? You see how I'm talking to y'all? I'm talking to y'all like y'all my best friends. You feel what I'm saying? Ain't no bouginess. Ain't no, you know what I mean, long ass words, none of that shit, bro. People keep trying to overcomplicate the market. You know what I'm saying? That's why I'm telling y'all, get put in front of the market, right information, and it can take you a long way, real quick too. You dig what I'm saying? I see all the ones. Let's keep it pushing. Terminology. Okay, this is why I want everybody that's brand new to go ahead and start pulling out that notebook. You know what I'm saying? Go ahead and have that pencil and pen out because I'm gonna go over some different terms that you're gonna need to know going forward in this bootcamp. You're gonna hear me say these different terms a lot. So I want y'all to go ahead and just write these shits down. Yeah, you know what I mean? Write them down. All right. So now we're gonna start off with majors, okay? So majors are the 8 most traded currencies. You dig what I'm saying? The 8 most traded currencies are the US dollar, the euro, Japanese yen, the Great British pound, the chef, all right, Canadian dollar, the New Zealand dollar, and the Aussie. Okay. These are the 8 most traded currencies. Okay. That's why they're called majors. You dig what I'm saying? Because these currencies have the most liquidity behind them. Okay. What is liquidity? You know what I'm saying? Liquidity is pretty much the amount of people that's trading and shit. You feel what I'm saying? How much money is circulating through this market? You feel what I'm saying? When it comes to liquidity, these major pairs right here are it. US dollar, euro, JPY, Great British pound, chef, Canadian dollar, New Zealand dollar, and the Aussie. Okay. All other currencies are considered minor currencies. Okay. All other currencies are considered minor currencies. Okay. So something that's not on here, like the ZAR, you know what I'm saying? Shit like that. Well, that would be considered an exotic. But something like, I didn't put an example up here. Something like, drop an example of a minor currency for my traders that's already on. I'm having a brain for it. And minor currencies as well. Okay, I'll give y'all some examples of the minor currency. I forgot to put it. Right? But any currency that is not These 8 are considered minors. Okay. So you'll see a lot of these currencies as we go along in this slide, in this PowerPoint right here. You'll see the minor currency. I just didn't put it on this slide right here. My apologies. All right.
I got your examples right here.
Oh,
AUD, which is the Australian dollar, the Canadian dollar, the Swiss franc.
Swiss franc is one. Those are majors, bro. Ain't minors.
Right, it's on here. I'm on MetaTrader 5. I'm just going off that.
Fuck MetaTrader 5. MetaTrader 5 some bullshit. I got y'all. We're gonna stick with this right here. All right, I got the minors on this PowerPoint. It's just not on the slide. All right. Currency pairs. All right. Currency pairs. All right, is the quotation of one currency against each another. All right, or each other. All right. So looking at an example right here, you see Euro USD. Okay. The Euro USD is damn, having brain fart, excuse me. The Euro USD is simply the euro against the US dollar. Okay, that's all that is. So y'all see me posting charts, so y'all may see something where GBP JPY, that's the Great British Pound against the Japanese yen. Euro AUD, that's the euro against the Aussie. You feel what I'm saying? NZD CAD, that's the New Zealand dollar against the Canadian dollar. You feel what I'm saying? So everything that we trade are based in pairs. You feel what I'm saying? It's the strength of one currency against another. All right. And that's what a currency pair is. Okay. The base currency. Okay. Base currency is the first currency in any currency pair. You feel what I'm saying? So we just went over currency pairs and understanding that a currency pair is literally just one pair against another. But the base currency in that pair is always the first one. Okay. So the base currency in this case scenario for Euro USD would be the euro. Okay. Because that is the first currency in that currency pair. So family little pop quiz real quick. If we're talking about GBP JPY, Great British Pound against the Japanese yen, which one is the base currency? Great British Pound or the Japanese yen?
Great Britain Pound.
Great British Pound. For sure. All right. Quote currency. Okay. The quote currency is the second currency in any currency pair. All right. So we just went over base. That's the first one. Euro in the Euro USD example, the US dollar is the quote currency. All right. So the base is the euro and the US dollar is the quote. Okay. So if we're talking about NZD CHF, the New Zealand dollar against the Swiss franc, right? Which one is the quote? Which one is the quote? NZD or CHF? If the pair is NZD, CHF. Say it again.
CHF.
CHF, right? Because that is the end of that pair, okay? If we're talking about Euro JPY, which one is the base and which one is the quote? Talk to me now.
Euro is the base and JPY is the quote.
Euro is the base, JPY is the quote. You know what I'm saying? Last one. If I'm talking about GBP CAD, give me the quote, give me the base.
GBP is the base and CAD is the quote.
Let's get it. Let's get it. All right. Pips. All right. Pips is something, I'm not even going to lie to y'all. Pips is something that I personally struggle with explaining. You know what I'm saying? Because it's like math. I'm not good with math. I'm pretty sure anybody that's on this call that's already a trader can attest that trying to explain pips to somebody is weird. You know what I'm saying? I'm going to put y'all on the website that calculates all this for y'all a little later on in the boot camp so that we don't got to worry about doing the math behind all this shit. You know what I'm saying? But just understanding what a pip is, okay? PIP is short for percentage in point. That's what PIP stands for, percentage in point, okay? And a PIP is a term used in the foreign exchange market to measure price movements, okay? So you ever see us, excuse me, we was on the beginning of the call. Somebody said that they smacked US 30 for like 60 pips. You know what I'm saying? That's how much price moved in his direction. Pips, that is the measurement of price. You know what I'm saying? Pips help traders understand how much the price of a currency pair has changed. You know what I'm saying? This is how we analyze and calculate how much prices move. They are mandatory for calculating profits and losses. You know what I'm saying? Setting stop losses and take profit orders. Okay. I'm going to give y'all the definition for stop losses and take profits in a little bit. Okay. And also evaluating the potential risk and reward of a trade. Okay. We'll go deeper in that tomorrow. Okay. But understanding that you have to understand the pips. You know what I'm saying? When we're talking about pip counts, you know what I'm saying? Just to give you a little example. y'all should already know. Like, y'all may see me posting on my story, or we just smacked GBP JPY for 45 pips or something like that, and we only risk 15 pips. You know what I mean? Risk to reward. That's how much we're risking. That's how much the reward is going for. Now, the amount of money you can make based on that pip movement varies on your lot size. Okay, that is something that we'll go over later on as well. Okay, but pips is just the measurement that price moves. Just like how when a car goes, we're talking speed with a car, it's in miles per hour. You dig what I'm saying? Or kilometers for certain places. Same thing for pips, but how the market moves. You know what I'm saying? That's the measurement with price. All right. One in the chat if you locked in with pips. I just want to make sure we all locked in with pips because pips can be a little confusing. You do what I'm saying? So if I did a decent job explaining that to you real quick, let me know real quick. Let me know if you're confused. For Shody Wody. For Shody. Let's keep it pushing. Does anybody need, I'll give y'all a little bit more time as well. You know what I'm saying? To write this down. Or if y'all need to screenshot it, take a time to screenshot this. You know what I'm saying? Screenshot this, you know what I mean? Or take out time to write it down. I keep it up here for a couple more seconds. For sure. Let's keep it pushing. More terminology. All right. Cross currency. You feel what I'm saying? Cross currency is a currency pair in which neither currency is the US dollar. Okay. So if we're talking about a pair that does not have the US dollar in it, when we're talking about pairs, it's something I did not put on the screen, which is going to be later on in the PowerPoint as well. But we're talking about major pairs, right? Remember how we just went over on the last slide what a major currency is. Now we're talking about major pairs versus cross currencies, right? And major pair is always something that has the US dollar attached to it, like USD CAD, the US dollar against the Canadian dollar, USD JPY, the US dollar against the Japanese yen, Euro USD, the euro against the US dollar. These are all major pairs. Okay. When you have a cross pair, is when the pair that you are trading does not have the US dollar involved with it at all. So now we're talking about shit like Euro GBP, which is the euro against the Great British pound. GBP JPY, the Great British pound against the Japanese yen. Euro JPY, euro against the Japanese yen. Euro NZD, euro against the New Zealand dollar. Okay. So understanding what cross currencies is and the different currencies that we are able to trade. We trade minors, we trade majors, and we trade cross currencies. Okay. We'll go a little bit deeper in that, a little bit deeper in the PowerPoint. Okay. Bid price versus offer price. Okay, a lot of y'all don't understand what bid is. Like, a lot of y'all are advanced traders. You found I'm saying? Like, y'all can mark up a chart and make some money for shit, but don't even understand the basics as far as like a bid versus offer. You feel what I'm saying? So just going over what bid versus offer is real quick. The bid price is the price at which you can sell something. Okay. It's the highest price that a buyer is willing to pay for a specific item or asset. Okay. So when you're talking about your bid versus your, first of all, let me finish this definition. Okay. Offer price is the price at which you can buy something. Okay. It's the lowest price at which a seller in the market is willing to sell a specific item or asset. The difference between the bid and the offer price is known as the spread, right? And we all know what spread is for all my traders. You feel what I'm saying? Y'all already know what the spread is. For people that don't, once again, it's the difference between the bid and the offer. So when y'all go look at y'all MetaTraders, if y'all went and downloaded MetaTrader 5, you feel what I'm saying? And y'all go like look at a pair, you feel what I'm saying? You go look at a chart, you'll see two lines. You feel what I'm saying? This is something that we'll go over tomorrow in depth. I will share my screen and show y'all exactly what I'm talking about. If y'all go look at it right now, for those that already downloaded the chart, you'll see two lines where prices move. You feel what I'm saying? You'll see price moving up and down, and where price is currently at, you'll see two lines. One is usually red and one is usually white. You feel what I'm saying? The one on top is your bid. Okay. The one on the bottom is your spread. I mean, is your offer price. And the space in between the two is your spread. So you know how cryptocurrencies have a way bigger spread than currency pairs. Some brokers offer a way smaller spread than other brokers do. You know what I'm saying? That's why doing your research and knowing who you're trading and who you're trading with and what you're trading is very, very important. Okay. Once again, don't let this confuse you. We will be digging deeper into this. We're just getting these definitions out the way. Okay. Margin. All right. Margin is kind of like a security deposit. All right. Security deposit that allows you to control larger positions. You dig what I'm saying? It can boost both profits and losses. So it's important to use it wisely and understand the risks involved. We will go deeper in that tomorrow. The whole lesson tomorrow is pretty much based on margin leverage. Okay. Leverage. Leverage is like a loan provided by your broker that allows you to control a larger position in the market with a smaller amount of your money. You feel what I'm saying? What does that mean? Let me excite some of y'all real quick. What does that mean? You can take $100 and turn that bitch into something absolutely insane. You can turn $50 and turn that shit into something absolutely insane. My biggest flip when it comes to trading, you feel what I'm saying, or my smallest account flip was 50 to 2 bands. You feel what I'm saying? Saying that to say you can take a little bit of money and turn that shit into a lot of money relatively fast. You feel what I'm saying? Using leverage. You feel what I'm saying? The higher the leverage that you use with your trading account, right? The more money that you have access to trade with. You feel what I'm saying? So you have some brokers that offer 1 to 50 leverage. What does that mean? For every dollar that you have, they're going to front you 50. You know what I'm saying? Or front you 50 times that. You do what I'm saying? So if you're trading with $100 times that times 50, that's how much money you're really trading with. You do what I'm saying? And they offer you that leverage. You know what I'm saying? And that does not mean that you can lose more money that you have. If I take $100 and I got that 1 to say 500 leverage, so they giving me 500 times of my $100 to actually trade with. And I lose my $100. Don't get scared and think that you're gonna lose more than $100. You only lose what you put in. You do what I'm saying? But that's the power of leverage. You feel what I'm saying? If we didn't have any leverage, y'all know how hard it is. I know how hard it would be for us to make money, or how long it will be, how long it would take for us to make money. Drop a 1 in the chat if you ever traded with an account. All my traders on here, drop a 2 or 1 in the chat if you ever traded with an account that was like 1 to 100 leverage. Did anybody ever traded with an account that was like 1 to 100 leverage? I see the one. I see the one. So for people that have traded with the 1 to 100 leverage, you can see the difference. You feel what I'm saying, between the 1 to 100 and the 1 to 500. It was tough. You feel what I'm saying, because you don't have that much money to trade with that you actually think you do. You feel what I'm saying? The higher the leverage, the more money they give you access to trade. You know what I mean? All brokers offer 1 to 500. You feel what I'm saying? And when we create our broker accounts tomorrow, I'm going to tell y'all to do 1 to 500. Okay. Continuing. Lot sizes. Okay. What is a lot? A lot is a standardized unit of measurement in Forex trading. Okay. So what does that mean? You know what I'm saying? Lot sizes is pretty much how much money you're putting down on a trade. A standard lot, standardized unit, you feel what I'm saying, is always considered $1. You know what I'm saying? That is the standard lot size that you can use. $1. Of course, you can go way lower than that. You feel what I'm saying? Some people are trading with 1 cent, 2 cent, 5 cent, 10 cent. You feel what I'm saying? And you may be thinking like, damn, like how are you making so much money off of $1, off of 10 cent, off of 20 cent, whatever the case is. Understand that everything that you put in the market is multiplied by 10. So if I'm putting 10 cents down, that's really $1 moving. You feel what I'm saying? If I put $1 down, that's really $10 moving. You know what I'm saying? So that's why you see people are making so much money off of 10 cent, 15 cent, 20 cent, $1, $5, $10. You feel what I'm saying? If you trading with a $10 lot size, you're finna make a lot of motherfucking money or lose a lot of motherfucking. You know what I'm saying? The higher the lot size, the more money you putting down on a trade, the more that you potentially win or lose. Okay. Long versus short. All right. Because a lot of people don't even know what long versus short is. We always go off of buy versus sell. My options traders know what long versus short is. You know what I'm saying? But a long position simply means that you are buying. Long is another word for buy. Okay. It's just trading terminology. You feel what I'm saying? So whenever you see somebody say, I'm about to long something, that simply means that they're buying. Think long, long, up. You know what I'm saying? A long position means that you are buying a currency pair or anything with the expectation that it will rise in value. So when you are buying something, you are expecting for it to go up. You know what I'm saying? You're expecting for the price or the value of whatever you are trading to go up. And you will make a profit if it buys. Okay. A short position means that you are selling. Okay. So long is buy, short is sell. Okay. And you are selling a currency or whatever you're trading with the expectation that it will fall in value. I just want to go ahead and make this clear right now that this whole bootcamp is going to be based on currency pairs. You know what I'm saying? I know that I keep saying in my definitions that you are buying or selling a certain asset. You know what I'm saying? We are talking about foreign exchange market currency pairs. Okay. Stop loss. An order placed to limit potential losses by automatically closing a trade when certain price level is reached. Understand that stop losses are mandatory for every single trade that you pop. Same as a take profit. You feel what I'm saying? A take profit order is an order used to lock in profits by automatically closing a trade when a specific price level is reached. Okay. Y'all always see me talk about TP Smack. TP Smack. TP is short for take profit. SL, as you'll see me say a lot in this boot camp, SL is short for stop loss. Okay, so make sure y'all put that in y'all definitions as well. TP is short for take profit. Stop loss is short for SL. These are your safety parameters for every single trade that you pop. Okay, so when you're placing a trade, this is why I say that everything that we do in this market is 100% calculated. Ain't no gambling behind nothing that we do. Everything that we do, we are calculating our risk and we put in a stop loss. So that stop loss is like a safety net. Imagine you got down falling out of a plane or some shit. Right below a plane is a big ass net that catches. You know what I'm saying? That's what your stop loss is when it comes to your money. You know what I'm saying? When you're popping a trade, there's always a possibility that you will lose money. Okay. You put a stop loss in for every single trade that you pop to limit the amount of money that you lose. Say, for example, I buy with the expectation that price should go up. Okay. I buy and all of a sudden price goes down, right? So if I'm buying and price goes down, what does that mean? I lose money. I put a stop loss in a certain area below price so that a price gets all the way down to a certain area where I'm seeing too much drawdown. I'm not comfortable with that no more. It will take me out of the market. You feel what I'm saying? Whatever, how much money that I lost. You feel what I'm saying? Automatically, hands free. That's why you set the stop loss in before you take a trade. Instead, right, of you popping a trade, say, for example, I buy that motherfucker and price goes all the way the fuck down and I'm losing money with no stop loss. It'll just keep going. You'll keep losing money until all of a sudden all your money gone. You know what I'm saying? So a stop loss is your safety parameter. You know what I'm saying? You have to make sure that you're popping a stop loss on every single trade that you take, that you will not blow your account, and make sure that you understand how much money you're risking when you're putting in a stop loss. Okay. Stop losses are essential, mandatory, all right, crucial, critical. You know what I'm saying? Same with a take profit. All right. So your take profit is literally your vice versa of your stop loss. Now, if I buy and price goes up and it goes in my direction and I'm making money, that take profit takes me out of the market with however much money that I made. That's all comes with analyzing your chart, which is something that we're going to go over tomorrow. You know what I'm saying? When you're popping a trade, say, for example, I'm popping a buy. I'm popping a buy with an expectation that price will go to a specific area. You know what I'm saying? When price gets to that specific area, I would like to take my money right then and there. A take profit is used so that as soon as price gets to whatever area you expected it to get to, it takes you out and locks in your profits. You feel what I'm saying? So your stop loss and your take profit go hand in hand. Both of those are mandatory for every single trade that you pop. You know what I mean? These are your safety parameters. Say, for example, you don't put in a take profit and price, you buy that motherfucker and price goes all the way up, but you don't secure your money because you didn't put in a take profit and then it comes all the way down. That's what's called floating profits. You feel what I'm saying? When price you may be $100 in profit because you didn't set a take profit in, you didn't put in that take profit in your trade. You may see $100 in profit, but you may only take $20, $15 because you didn't take your money when you were supposed to. That's what the take profits. Okay, drop a 2 in the chat if you locked in with stop loss versus take profit. My new people, you understand the difference between a stop loss and a take profit. I see you, Coop. 2 in the chat if you locked in with take profit versus stop loss. Everything, if you're confused, I promise you everything will make a lot more sense once we start getting the visuals on everything tomorrow. Okay. Once again, it's just terminology to get everything out the way. I want some more tools in that, man. Make sure I'm not talking to myself, man. You know what I'm saying? What's up? How we feel about this? Okay, I see it. I bet. Liquidity. All right. Liquidity refers to how easily and quickly a currency pair can be bought or sold without causing significant price changes. All right. So that's your, you know what I mean, your Webster's definition. You do what I'm saying? Like that's your very smart definition, right? Saying all that to say refers to how much money is moving in that market. The more people that are trading this specific market, or the more money that's fluctuating through this market, the more liquidity is in it. You know what I'm saying? That's all this means at the end of the day. You know what I'm saying? So your major pairs, like we went over earlier, the major pairs like the US dollar, Great British pound, et cetera, have the most liquidity because these are the most traded currency pairs. They have the most money circulating through them. Okay. So liquidity is just another word for how much money is circulating through the market. The more liquidity, the better it is for you. The more volatile it is. Volatile means price can go up and down all day. You feel what I'm saying? It can be wild. You know what I mean? So you may got to make sure that you're analyzing your charts the right way. All right, let's keep pushing. Okay. Why should you trade in the foreign exchange market? You feel what I'm saying? Why should you do it? Why is this something that you would want to take advantage of? Why would this change your life? You feel what I'm saying? First things first, low transaction costs. When we talking about Forex versus, you know what I mean, doing stocks, bonds, options, shit like that, Forex don't cost a damn dime. You feel what I'm saying? When we talking about that in comparison to other things or even investing. You feel what I'm saying? Like Forex don't cost nothing but the spread. You feel what I'm saying? And occasionally swap fees if you hold your trade. You know what I mean? But trading is very, very cheap. You dig what I'm saying? And it's very, very easy to get started with. Okay. It's a market that's open 23 hours a day, 5 days a week. Like I said earlier on the call, you feel what I'm saying? As compared to the stock market and people that trade options, those people can only trade from 8 to 5. And then it's a wrap. You know what I mean? They gotta wait till the whole next day. We are trading 23 hours a day. You know what I mean? So we have unlimited opportunities all day, every day, 5 days a week. Once again, the market closes on Friday at 5 p.m. and it 6 p.m. and it opens back. Friday at 5 p.m. and it opens back up on Sunday at 6 p.m. Okay. So the market is only closed on the weekends. And that's specifically for currency pairs. And we're talking about cryptocurrency. This is open 24 hours, 7 days a week. You know what I'm saying? There's a lot of people that trade Bitcoin, Ethereum, you know what I mean? Ripple, stuff like that. And you can trade these cryptocurrencies too. And we're talking about a cryptocurrency market that is open 24 hours a day, 7 days a week. It never closes. You know what I'm saying? So depending on what asset that you want to trade, you can literally be trading all day, every day, making money all day, every day. You feel what I'm saying? No one can control this market. I know a lot of people think that the market is controlled by a lot of people that put money into it. You feel what I'm saying? Like they think that the value of a currency will go up because a lot of people bought that currency, or the shit will sell because a lot of people sold the currency. That's not the case. You feel what I'm saying? Nobody controls this market. It is ran by an algorithm, something that I will go over a little bit later on as well. You know what I mean? And no one controls this shit. You feel what I'm saying? It's not manipulated. You know what I mean? The only thing that runs this market is the algorithm. As long as you understand how the algorithm moves, you understand that there's no manipulation behind it. You understand that everything happens for a reason. Nothing is random. You know what I'm saying? Leverage, as we were just going over in the last slide, understanding how far leverage can take you. Understanding that you can leverage a little bit of money and turn that shit into a lot. You know what I mean? Having the higher leverage you can have on your trading account, the more money that you can make and the faster you can make it. So understanding that you does not take a lot of money to make a lot of money. Like I say, y'all always see me say on my store, $50 to $100. I'll show you what it can do. I'll turn it into some bands, literally. You know what I mean? Does not take no money at all to get started with the right leverage. Okay, liquidity and volatility. Okay, depending on what session you're trading and what pairs you're trading, you will have plenty of opportunities to make money. Like it does not make sense. The amount of liquidity that is fluctuating through these markets, like I said, it's a $7.7 trillion market that we fucking with right now. You know what I mean? So the market's moving, and there are big players that are within this market as well. Okay, so you'll have unlimited opportunities to make money, and the volatility behind is insane. What does volatility mean? You can make some money real fast. Price will move very, very fast in a certain direction. And if you're on the right side of price, say for example, you bought price, the more volatility that's in that market, pretty much the faster you'll make money. You know what I mean? If you have a pair or you have a session that you're trading in where it has low volatility, you'll see that price isn't moving anywhere. It's kind of stagnant. You know what I mean? Price isn't going anywhere in a certain direction. You won't have as much opportunities to make money. But when you're talking about volatile pairs and volatile sessions, these are when it get crazy. It's when you see everybody making hella money in 30 minutes, you know what I mean? And shit like that. Because we're trading with the volatility behind price. Okay. Like I said earlier, it doesn't take much to get started. Okay. It does not take much to get started at all. I'll be telling all my students to start off with $50 to $100. You know what I'm saying? Forex has this notion that you have to have $2, $3, $4, $5, $6,000, 10 bands to get started. And it did used to be that way back in the day, back in the fucking 1990s. You know what I'm saying? You had to have a minimum of 10 to 50 mil on some shit to get started with this market, because this market was only intended originally for big banks and hedge funds. You feel what I'm saying? Which is something I'm going to go over a little bit later on as well. But that's not the case no more. You know what I mean? We're in 2023. You feel what I'm saying? There are a lot of, we're in the age of the internet. You feel what I'm saying? There's a lot of online brokers that are giving people the opportunity to take advantage of the foreign exchange market with little to no money. You feel what I'm saying? Then you have what's called prop firms, right? Where if you don't have access to a lot of money, you can pay and pass a test. For example, you can leverage $10,000 worth of money for $99. You know what I mean? With certain prop firms, $10,000 you're trading with, just pay $99 and pass the test showing that you know how to trade. You feel what I'm saying? So there's countless options to be able to get some money and make some money. And it don't take nothing at all. I always say $50 to $100 to get started. Once again, coming back to that notion that you got to have a lot of money to get started. That's not the case, family. If you can't flip $1,000, I mean, if you can't flip $100, what makes you think you're gonna flip $1,000? You know what I mean? A lot of people fail in the foreign exchange market simply because they think that they don't have enough money invested. But family, once again, everything is precise. You know what I mean? And if you can't flip a small amount of money, you damn sure not gonna be able to flip a large amount of money. You know what I mean? You're just gonna lose your money faster. You know what I'm saying? So understand that it doesn't take a lot. And if you can flip a small amount of money, if you can flip $50 consistently, imagine what you can do with 500, 5 bands, shit like that. You know what I'm saying? The opportunities are endless. Okay. And it's also not hard to get started as well. Like, these brokers are giving you it's millions of brokers, bro. Like, it's hella brokers that you can take advantage of. Like, it's so many different ways you can start trading. It doesn't even make any sense. They put it shit right in our face. You know what I mean? So it's on y'all to actually go and get that information and get started. I'm going to put y'all in front of the information y'all need. But pursuing it, this is all on y'all. You feel what I'm saying? Because it doesn't take anything to go ahead and get started with trading. All right. The difference between stocks and currencies, right? You feel what I'm saying? Understand that, like, when you're trading stocks, right? Stocks had, like, you know how many stocks there are, bro? 6,000 plus, as it says right here. You feel what I'm saying? There's 6,000 plus stocks to trade. Which one you finna trade, bro? Which one you finna invest in? You dig what I'm saying? Like, that's confusion, bro. When people start coming into the stock market and shit and it's trying to invest and trade stocks, they don't even know what to start off with, bro. You feel what I'm saying? There's so many different options. Then when it comes to stocks, it's heavily news based. You feel what I'm saying? Which means that any people are going along with news and data, what's called fundamental analysis. You know what I mean? And trying their hardest to make money based off of what a website says. And it's 6,000 plus stocks, bro. That is hard to figure out which one I'm going to invest in, bro. A lot of people have not gotten started with their investing journey simply because they do not know what to invest in. The 6,000 plus currency pairs, it all boils down to 7, 8. You feel what I'm saying? We're going to count every single currency pair. That's a typo. That's supposed to say 8. All right, 8 major pairs. You feel what I'm saying? And that I went over at the beginning. Okay, all 8 major pairs. That's everything. You feel what I'm saying? All 8 major currencies, they pair up, and that's that. So when it comes to decide what you're going to trade, not that hard. You feel what I'm saying? 6,000 plus stocks versus 7 major pairs. You feel what I'm saying? 7 major currencies. Just pair them up, figure out what you're going to rock out with. Okay. And then understanding the difference between investing versus trading. All right. Investing, you can only buy something. You feel what I'm saying? First things first, investing, it takes God knows how long for you to make your money with investing, right? You know what I'm saying? People will buy a stock, buy a cryptocurrency. You feel what I'm saying? How many of y'all was on the Ethereum wave, on the Ripple wave, on the Bitcoin wave? You feel what I'm saying? And y'all was buying these cryptocurrencies, praying to God and waiting for God knows how long for price to goddamn blast off. Man, family, you know about XRP, Ripple, that shit just blasted off like 2 months ago. You feel what I'm saying? The last month. And we've been talking about Ripple for the last 2 fucking years. And it just blasted off like 2 months ago. A lot of people just made their money. Saying that to say investing can take so fucking long for you to make your money. Another thing about investing is that you can only buy. Okay, you can only buy and pray to God that price goes up. That's the whole thing with investing. You're buying a stock with the expectation that the value of that stock goes up. Okay, but what if price goes down? Can you profit off of the price of selling? You feel what I'm saying? Can you actually make a profit if price turns around? With investing, you can't. You feel what I'm saying? With investing, you cannot make a profit off of selling, off of when price is coming down. With trading, you can. We make a profit off of the fluctuation of price, no matter if it's going up or going down. That's why we're talking about short versus long. You know what I'm saying? Long buying, short selling. You feel what I'm saying? We are able to fluctuate we are able to profit off the fluctuation of price, family. You feel what I'm saying? So no matter what way price is going, no matter what direction price is going, I can make money off that. Investing, if I buy a stock, say for example, I buy Apple, you feel what I'm saying? And price goes down. Guess what? I'm ass out and I gotta just take that loss. You feel what I'm saying? Or I can just hold on to the investment and pray to God that price turns around. With trading, say for example, I buy Apple and then price goes down. All right, close the buy, sell it, profit. Do what I'm saying? So the difference between investing and trading is with trading, you can buy and sell, you can profit off of the fluctuation of price, no matter if it's going up or down. And with trading, you can see your money 10 times faster. I know y'all see me, y'all see what's going on. Y'all see the traders making their money relatively quickly. We be dropping Zoom links at 10 o'clock and be off the call by 10:30. Everybody done made their money. You know what I mean? Versus investors be waiting years and years and years on it, months and years, just to see a couple dollars. You know what I mean? Traders, we are able to make our money fast, very, very fast. You know what I mean? NFP was today, news releases was today. You know what I mean? People were able to make money literally in a second. You know what I'm saying? 2 o'clock hit, boom. You know what I mean? Like people, you're able to make your money very, very fast as long as you're trading with the liquidity and with the volatility, which came back to those first two examples right here, liquidity and volatility. You know what I mean? Keep it pushing. Let's keep it pushing. Is this Eastern Standard Time for these sessions? Yes, everything that I'm going to be going over on this call is based on Eastern Standard Time. So if you are not in Eastern Standard Time, make sure you calculate that to go along with Eastern Standard Time. All right. Let's keep it pushing. What is traded in Forex? Okay, we were just pretty much going over this, but just to dive a little bit deeper to what's going on, all right? We are essentially trading different currencies against each other, okay? So once again, we know the value of the US dollar can be a certain value. We can see the euro being a different value. So if the euro has a higher value or more strength than the US dollar, then we will buy the euro USD chart in expectations that that chart will rise. Why? Because the euro has more strength or is worth more than the US dollar. Okay. So we're essentially trading different currencies against each other. But understanding that, you know what I mean, nothing is physical, that can be confusing. You feel what I'm saying? A lot of people be like, oh shit, how are you trading currencies against each other when you don't actually own the currency, right? So the best example that I can get from this, right? And I gave the link for this specific quote. It's off of babypips.com, which is also a website I'm going to give y'all at the end of this boot camp for y'all to take advantage of. This is the best possible example that I can get to break it down as far as understanding what we are doing and how it's not physical. You know what I'm saying? So think of buying a currency, reading this quote out, right? Think of buying a currency as buying a share in a particular country, right? Kind of like buying shares in a company, right? Like Apple, for example. Okay. The price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. Okay, saying all that to say, you feel I'm saying that the price of a currency is based on what's going on in that country. You do what I'm saying? US dollar, what's going on with the dollar? You see every single currency drop, every single country dropping a dollar. You feel I'm saying? Nobody want to fuck with the US dollar no more. They trying to turn everything to cryptocurrency and shit. So what do you see? And as a result of all that, you see the value of the US dollar go down. Okay, the value of the US dollar dropped off this summer simply because of everything that was going on. You find what I'm saying? When everybody started announcing that they was dropping the US dollar off, okay, when they started coming out with that Fed now shit back in the summertime, that's when the US dollar dropped off. You know what I'm saying? So that's all that means. Okay. In Forex trading, when you buy something like the Japanese yen, you are basically buying a share in the Japanese economy. All right. You are betting that the Japanese economy is doing well and will even get better as time goes. You know what I'm saying? Saying that to say, or what does that mean? You're expecting that price is going to buy over time. You're looking at the Japanese economy. You think, damn, that's doing good. You feel what I'm saying? This could lead to the value of the Japanese yen rising. I'm going to buy it in expectations that the value of that Japanese yen will rise. Okay. You are betting that the Japanese economy is doing well and will even get better as time goes. Once you sell those shares back to the market, hopefully you will end up with a profit. Okay. Well, to sell those shares back to the market mean another long story short, another word for take profit. Once you take your money, once you get out of the market, once you close your position, hopefully you will end up with a profit. Okay, you can end up with a loss as well. That's all that says. Once you sell your shares back to the market, or once you close your position, hopefully you will end up with a profit. Okay. In general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to other economies. All right. And if y'all want to link to that, it is right here. You feel what I'm saying? I will give y'all this PowerPoint after we get up off the call. Everybody have access to this. If y'all want this link to read up a little bit more on that, by all means hit this link right here. It'll take you right to the page where I got this quote from. Okay. That's all we're doing in essence, okay? And I know that may sound like very, very confusing. It may sound intimidating. You know what I mean? Like it can sound real, real intimidating when I'm sitting here talking about different economies. You see, especially when you're like not in the politics and shit. Honestly, I'm not in the politics at all. I am the most regular person out here. You know what I'm saying? I'm not no goody two shoes, extra smart ass nigga when it comes to these politics, bro. I'm not, you know what I'm saying? Like I don't know what's going on and I could really care less. You know what I'm saying? I understand that you don't necessarily have to know what's going on in every single country to make money. That's why there's two different types of trading analysis. There is fundamental and then there is technical. Fundamental analysis is going off of economy, going off of news, going off of what's going on in each and every country, and basing your analysis on the economy. Versus technical is what I'm a master in, which is marking up a chart. You feel what I'm saying? Now I don't give a fuck about what's going on in the country. All I care about is about what the chart is telling me. Okay, that's what I specialize in. That's what I'll end up showing y'all a little bit more on tomorrow's call. Okay. But don't let this intimidate you or scare you from wanting to learn how to trade. You feel what I'm saying? This is nothing. Trust me, this is nothing. Okay. What is traded in Forex Part 2? Okay. There are a lot of different currencies to trade, but majority of retail traders trade the major pairs. Okay. They call them the major currencies because they are the most traded currencies. You feel what I'm saying? So here we go right here. This is all, oh shit, my fault. My fault. Go back. Okay. These are all your major currencies right here. So y'all want to take a screenshot of this right here. You feel what I'm saying? These are all your major currencies. Where they come from, you know what I mean, and what currency they have. You know what I mean? So you have the Aussie, right? Which is the AUD, Australian dollar. Okay. You got the Canadian dollar, right? CAD, that's a Canadian dollar, also known as loonie. We don't really care too much about these nicknames, to be honest. You know what I'm saying? Like I don't go off these nicknames. This is just so y'all can have these in y'all notes, just in case somebody else may pronounce these currency pairs as the nicknames. But understanding what the Aussie is, right? Australian dollar is the AUD, Canadian dollar is the CAD, the Switzerland franc is the chef, right? The euro is, of course, the euro. Great British pound is GBP, okay? Japanese yen is JPY. New Zealand dollar is NZD. And US dollars, of course, USD. And the easy way to understand this, right, is just understanding that the first two letters of every single symbol is usually, right, or not usually, every single time, the first two letters of every single symbol is the initials for the country. You know what I'm saying? So you notice how AU, Australia, CA, Canada, right? The only one that doesn't fit in with this one is CHF. And it's because CHF that's just weird. You know what I mean? Swiss got their own shit going on when it comes to their currency, right? But every other currency fits into play, right? Euro, EU, Euro, GP, Great Britain, JP, Japan, right? NZ, New Zealand. So the first two letters of every single symbol will give you the country, and the last letter will give you the what? The currency, right? So AU, Australian dollar, right? CAD, Canadian dollar. CHF, the last letter stands for the franc, right? Euro, it's the only one that doesn't fit in because Euro is already short. See, EURO, symbol is EUR. You feel what I'm saying? Not that long of a word, right? But all the other ones fit into play. GBP, pound, Japanese yen, right? New Zealand dollar, US dollar. Okay, so every single last letter on the symbol represents the currency. The first two will represent the country. Okay. Let's keep pushing. What else is trading the Forex? Part 3. Okay. You trade in the foreign exchange market. Once again, you are buying or selling different currency pairs against each other. Okay. Currencies are traded in pairs. You will never ever see one currency by itself. Okay. So understand that, yes, we have the major currencies, right? US dollar, Japanese yen, Great British pound, Aussie, the chef, et cetera, et cetera, et cetera, right? We have all the we have the major currencies, but understand that when you're trading, you are trading one currency against another currency. You're never trading one currency by itself. It's always a fluctuation of price between two different currencies. So when you are looking at your charts, like if y'all go look at y'all MetaTrader 5s, if y'all go look at TradingView, you feel what I'm saying? You'll see that everything is in pairs. Euro USD, Euro against the US dollar, GBP JPY, Great British Pound against the Japanese yen, USD CAD, US dollar against the Canadian dollar, et cetera, et cetera. Everything is done in pairs. Okay. Every country has a currency, and the value of each currency fluctuates each and every day. Exchange rates are the price of two different currencies against each other. Okay. They move based on which currency is stronger or weaker. Okay. So once again, that all comes down with the analysis that you do when you're looking to place a trade. Okay. Understanding that one currency is stronger than the other, that should lead to a certain reaction on the chart. You feel what I'm saying? Exchange rates are the price of the two different currencies against each other. Make sure y'all remember that. Okay. If you're still locked in with me, and make sure I ain't talking too fast or anything like that, if you understand everything so far, drop a one in the chat, man. Let me know you're still locked in. See you, gang. See you, gang. Cool. Let me know we still locked in. There's 15 people on this call. Let me know we still locked in. Only 5 ones, huh? I'm assuming everybody's busy or something. So I'm gonna just assume it. Okay. Gonna keep it pushing though. By all means, family, if you are confused on anything that I am going over, if something's not making sense, by all means, like mute your mic, ask the question. You know what I'm saying? Don't be on here confused about anything. Excuse me. That's the whole reason why we on this boot camp, so everybody can have a full understanding of what the foreign exchange market it is. You know what I mean? So if you have any questions, drop it in the chat or mute your mic as I'm going along. Don't be confused on anything. Okay? Let's keep it pushing. All right. What is trading in Forex? Part 4. Majors, minors, and exotics. Okay. Understanding what the 3 different types of currency pairs you can trade are. Okay. You got 3 different categories when it comes to currency pairs: majors, minors, and exotics. Okay. Minors are also known as crosses. All right. We went over a cross earlier when we was talking about Euro GBP. That is a cross, or also known as a minor. Okay. Remember that major pairs always have the US dollar included in that pair. Okay, so we're talking about things like Euro USD, USD JPY, GBP USD, USD CHF, etc., etc. All these examples have the US dollar in these pairs. These are the major pairs. Why? Because they have the most liquidity circulating through these pairs. The most money is going through the major pairs. These are always the best pairs to trade. Okay, they have the most liquidity behind them. The most money is circulating through these pairs. Minor pairs are any pairs that use any 2 other major currencies except the US dollar. So remember earlier when I didn't have the minor pairs on the slide. Here's the definition for minor, okay? Your minor pairs are any pairs that use any 2 of the other currencies except for the dollar, right? So remember that your major pairs always have the US dollar included, okay? Your minor pairs are the pairs that do not include the US dollar, but are also major currencies, right? So just to make sure that everybody's not confused, right? Let's go back a little. Right? Remember that these are all your majors, okay? These are all your major pairs right here. You feel what I'm saying? So understanding that all these are your major pairs, you can pair any of these 2 together. You feel what I'm saying? Anything that has the US dollar in any of these pairs, NZD USD, GBP USD, USD CAD, I mean, anything like that is a major. Any one of these pairs that do not have the US dollar associated with it, like NZD JPY, GBP JPY, Euro GBP, GBP CAD, right? Pairs like these are what are called minor pairs, minor currency pairs, okay? So those are your minor pairs. Any 2 pair that does not have the US dollar associated with it, but are majors, okay? Exotic pairs are the least traded. These are the least traded pairs. You know what I'm saying? But exotic pairs are the least traded currency pairs that have the least liquidity behind them. You feel what I'm saying? Not too much money is circulating through these pairs. Why? Because these pairs come from countries that markets are still developing. You feel what I'm saying? They don't got as much money circulating through them as us as we do, right? So we're talking about shit like Brazil, you know what I mean? The ZAR, which is the South African rand. You feel what I'm saying? Or the Hong Kong dollar. You feel what I'm saying? These are smaller countries that don't have as much money circulating. They're still establishing their government. They're still establishing their market. You know what I mean? Everything is still developing over there. So you are able to trade damn near every single country that has a currency, but most of them, right, do not have the liquidity behind them that you're looking for. That's why we only trade primarily majors and minors. Okay, but you can find pairs that have exotic ones, like once again the ZAR, Hong Kong dollar, the Brazil dollar. You found out whatever you're looking to trade. But understand that not every broker offers all these pairs. You feel what I'm saying? So in order to trade your major exotic pairs, you feel what I'm saying, you would need to find a broker that allows you to get access to these markets. You know what I mean? Most brokers that you are associating yourself with when it comes to getting yourself into the market, you primarily offer majors, minors. They will offer some exotics, but not all of them. You feel what I'm saying? Understand there's 180 different currencies you can trade. You will not find all of those currencies. You know what I'm saying? It's just not going to happen. You know what I mean? Most brokers rely on majors, minors. Then we talk about indices like the NASDAQ, you know what I mean? S&P, US 30. They offer commodities like gold, silver, platinum, cryptocurrencies like Bitcoin, Ethereum, Ripple, Cardano, et cetera, and stock. Okay, but when it comes to exotic pairs, it's very rare that you'll find a whole list of exotic pairs, and you're damn sure not going to find all 180 of them. So just make sure that when you're starting to come into this trading shit, focus on the majors and the minors. You feel what I'm saying? Really the majors, if you really want to start off somewhere solid, focus on the major pairs. You feel what I'm saying? Exotic pairs ain't really hitting on nothing. You know what I mean? But we just had to throw that in there so y'all can understand everything that you are able to trade when it comes to currency pairs. Okay. And there are 180 different currency pairs that you can trade. That is insane. All right. Let's keep it pushing. Different market participants, understanding who you are trading against, right? It's important to understand where you stand in the market and who you're going up against. You feel what I'm saying? You're not just trading by yourself. It ain't you versus you. You know what I'm saying? It's you versus, first of all, thousands, if not millions of other people that are just like you. And then you're going up against hedge funds, banks, major corporations. You feel what I'm saying? It's a lot of people that are up in this motherfucker. You'll be surprised as to who trades, which we're about to go over. Okay. Fun fact, up until the late 1990s, around 97, 98, you know what I mean? You had to have around 10 to 50 million to start trading, you know what I mean? So all this, us as retail traders coming in, you feel what I'm saying, is people with got a lot of money, 100, 2, 5, couple thousand, you feel what I'm saying? Even understand like $10,000, $20,000, that's not a lot of money when it comes to the foreign exchange market, bro. Remember how much money is circulating through the shit. You feel what I'm saying? Y'all haven't even seen a number with trillion behind it. Y'all ain't never even seen that many zeros before. You know what I'm saying? That's how much money's coming behind this market. So when you whatever you think is a lot of money is not a lot of money. It's not. You feel what I'm saying? And up until the late 1990s, you had to have at least 10 to 50 million to start trading with. So all this us coming in, this is all fairly new. You also couldn't do this electronically until the late 1990s, if not early 2000s. You feel what I'm saying? All this being able to trade through your phone shit is all relatively new. People used to have to when they trade, shit was marked up on a piece of paper, put in the mail type shit. You feel what I'm saying? Or they putting in orders on the phone. How many of y'all have ever seen Wolf of Wall Street? Number one, have you seen Wolf of Wall Street before? Has anybody seen Wolf of Wall Street? So y'all seen Wolf of Wall Street. What did y'all see? What did y'all see them doing? They hitting that phone, ain't it? They hitting that phone, putting in them orders on that phone. You feel what I'm saying? On that pay phone at that. You get what I'm saying? They calling that shit in, bro. And then you gotta wait for the nigga that's on the other side of the line to put the order in and confirm it and all types of shit, bro. It's not instant like how it is now. With back in the day, it took time to get into the market, bro. And it was a whole process. Now we're literally just able to press buy and sells on our phone and be into the market within a matter of seconds. You know what I mean? So understand that we're all living in some good times right now, to be honest. If this was goddamn about 20, 30 years ago, boy, I promise you wouldn't nobody be trying to learn how to trade right now. I can promise you that. You know what I'm saying? Oh, shit. Go back. Let's go back. Let's go back. Okay. This market was only intended to be traded by banks and large corporations and institutions. Okay. However, due to the rising popularity in Forex, we now have online brokers that offer us as retail traders an opportunity to take advantage. Okay. So, like I was just saying earlier, man, this market was really pretty much based for the big dogs and the big dogs only. You feel what I'm saying? But due to, you know what I mean, people coming out saying that this trading shit is lit, you feel what I'm saying? And certain people, investors that know how much money is circulating and view it as a major investment opportunity, they open up brokerage, they open up broker accounts. I'm saying they give us as retail traders an opportunity to put our money into the market. You feel what I'm saying? So this is all fairly brand new when it comes to how long the foreign exchange market has been around. But we're in some good graces right now to be able to take advantage of this. We really are. Okay. We're pushing. First things first, who's the biggest dog in this motherfucker, right? When it comes to the foreign exchange market, who is the biggest dog in here? Who runs this motherfucker, right? Answer is your banks. You know what I'm saying? Your banks are your biggest players in this market. They don't play. You know what I'm saying? Commercial banks and other large financial institutions are the ones that determine exchange rates. Okay, you'll understand that every major financial institution at every major commercial bank for every country controls that country's value. Okay, that's why they are known as market makers, because they are the ones that control whatever country they are talking about. You know what I'm saying? They control the value of that country. They can always make the price move. Okay. They are most responsible for most of the daily trading value. Okay, so when it comes to how much money is circulating through this market, when we talk about that 7.7 trillion, understand that the majority is coming from these big ass banks like Citibank, JP Morgan, Barclays, Bank of America, Goldman Sachs, and every other bank that's out there. You know what I'm saying? Those are just the most major ones. You know what I mean? But every single bank is participating in the foreign exchange market, no matter how big the bank is, no matter how small the bank is. Let's believe that this is how banks make their money. Banks make their money by A, loaning it out to other motherfuckers, you know what I'm saying? And then putting interest on it and whatnot. And B, trading that money in the foreign exchange market. You ever put money into a bank account, can't touch it. You know what I'm saying? They be trading the hell out of that money. You know what I'm saying? They just know what they're doing. Okay. So understand that when you put your money into your banks and whatnot, that money's getting traded. You just don't know it. Okay. And all the major banks and corporations are taking advantage of this foreign exchange. Right. We talking about electronic liquidity providers. All right. So remember when I was saying earlier that this market is ran by an algorithm. Okay. And the algorithm controls what price is going to do, how she moves, and how she delivers. Okay. So a lot of people don't even understand this. You know what I'm saying? But there are specialized firms out that play a major role in the market in the market by providing more liquidity into the market, as well as using an algorithm to control price. Okay, so these are called ELPs, you feel what I'm saying, for short. These are major little small corporations out here that pretty much control price using this algorithm. So for all of our smart money traders on here that already know about trading and understand the way that we trade smart money, the algorithm that runs this market, ELP, electronic liquidity provider. Okay, that's just your common terminology for it. You know what I mean? What else is in this market? Large commercial companies. You feel what I'm saying? So you got to understand that just because people are trading in the foreign exchange market doesn't necessarily mean that they're here to make a profit like we are. Okay. We trade to make a profit. We're trying to profit off the fluctuation of price. You got to understand that some companies have to take advantage of the foreign exchange market to do business, right? Some U.S. companies, for example, U.S. companies needing the yen to get products from Japan. Think of Apple again, right? Apple, everything they do when it comes to that iPhone is shipped from Japan. So in order for them to buy these products from Japan, what do they got to do? Translate that US dollar to Japanese yen and pay them boys. You feel what I'm saying? Then they send that shit back. So understand that not everybody is in here simply to make money. Some people have to be a part of the shit. If you are getting your goods from other countries and you have to exchange your money for Japanese yen or any other currency that you're dealing with, foreign exchange. You're dealing with Forex. You are trading. You're just not doing it necessarily for a profit like how we are. Okay, you're doing it for other reasons. Okay, they still have a major role on price. These large commercial companies, Netflix, you feel what I'm saying? You got weed companies out here, shit like that. You feel what I'm saying? Major stocks. You know what I'm saying? When you're thinking about large commercial companies, you think about stocks. You know what I mean? These are companies that don't necessarily trade for profit, but once again, using the foreign exchange market to get their goods from across the world. Okay. Who else is in this market? Governments and central banks. Okay. So, difference between commercial banks, central banks. Okay. National governments and banks like the Bank of England. Think about the Federal Reserve. This is what you call a central bank. You feel what I'm saying? Federal Reserve, they use the market to handle operations and international trade. You feel what I'm saying? So when we talk about international trade and going back to what we were just saying, as far as getting things from other countries and having to exchange the US dollar for other currencies to be able to make transactions, this is what we do as well. Okay. Central banks love to manipulate price by adjusting interest rates, controlling the money supply for their country, or major news releases. That's why you have to be tapped into what's going on when it comes to like Forex Factory or understanding what days major news releases come out. Okay, this is all controlled by your central banks. Those red folders that we be trading through, that's central bank. You know what I'm saying? That's all the central banks and the governments doing that shit. You know what I'm saying? And then last but not least, us at the bottom of the food chain, we here as retail traders. Okay. We are what's considered retail traders. We are the smallest participants in this market. All right. We are this big. Nobody cares about us. All right. We are really the sheep in the wolf's line in the wolf's den. You feel what I'm saying? They coming to tear us up. You feel what I'm saying? So we got to make sure that if we're trading in the foreign exchange market, we got to be on top of everything. You feel what I'm saying? The analysis has to be on point. The risk management has to be on point. Because when it comes to this market, they're trying to take all of our money. You feel what I'm saying? That's why I said earlier, not up against just you. You are up against millions of other people and people that got way more money than you too. You know what I mean? Um, we buy and sell currencies in hopes of making a profit, and we focus on price fluctuations. Okay. Some people have a lot of money to invest. Some people only have a little bit to invest, but we all trade with the same goal in mind to make money. Okay. So you see some people trading with $100. You see some people trading with $1 million. So we all got the same goal at the end of the day. You know what I'm saying? To make this money on. But this is what we are at. We are at the bottom of the food chain. So you see how low we are. You see how big, how much money and all the big players that we are playing against right now. Imagine you going against JP Morgan. You know what I'm saying? That's essentially what you are doing with your trade. Understand that for you to make money, someone else has to lose money. That's just how the shit go. You feel what I'm saying? So which one you gonna be? You gonna be the one that makes money or loses money. You feel what I'm saying? That's where analysis comes into play. Okay. We're locked in on the different market participants because I know that there was a lot before we go on to the next subject in this PowerPoint. Let me know that we locked in still, man. Let me get a one ski. Let me get a one ski. We are locked in on different market participants. Okay, I know that was a lot. I don't want to talk everybody head off without making sure that we are locked in and confusing anybody talking too fast. Oh, good pushing. Market makers and ECNs. Okay. So my traders, you already know what an ECN is. You probably just didn't know that you knew what an ECN is. You know what I'm saying? But market makers is just another word for brokers. Okay. All of our brokers that we use. Brokers are the platforms or entities that act as the middleman between traders and the foreign exchange market. Okay. So in order for us to put our money into the market, in order for us to profit and put our money in and take our money out to flip, everything goes through a broker. We have to fund our money up through a broker. That broker puts our money into the foreign exchange market. We trade it. When we trade it and we want to take our money out, the money goes from the foreign exchange market to the broker and from the broker to our bank accounts. Okay, so that broker is always the middleman. Okay, they create a market for traders by facilitating buy and sell orders. Okay, market makers profit from the spread and swap fees that are associated with each and every trade that you take. Okay, so remember when we talked about spread earlier, which is being the difference between the bid and the ask price. Okay, once again, that's something that we're going to go deeper in tomorrow. But that's how they profit. The bigger the spread is on the pair that you're trading, the more money that the broker will profit off of. And then swap fees are coming with how long you hold a trade. If you hold a trade longer than 24 hours or something like that, that's when swap fees will start coming into play. Understand that all these fees are very, very relatively small, according to how much money you're trading in the market. Okay. Market makers are usually beginner friendly and offer demo accounts for practice. Okay, every single broker that you find has a demo account. Okay, usually every single broker that you find also has some type of educational platform on it that gets you introduced to trading. You feel what I'm saying? So most brokers are giving you free information and give you a demo account to practice on with fake money. Okay, a demo account is what I'm going to put all y'all on tomorrow to get y'all to start dealing with. Okay, fake money to practice when and start getting used to seeing profits and or losses. Okay. However, there may be conflicts such as increased spreads and slippage. So once, like I was just saying earlier, the higher the spread is on a specific pair, the more money that the broker can make off your trade. Okay, slippage is pretty much another word for market manipulation. You feel what I'm saying, or broker manipulation. When price will say, for example, you have a take profit, right? When we was going over take profits and market parameters that we put inside of our trade setup, and price is on the way to our take profit. When price gets to our take profit, it's supposed to take us out however much money that we made when it gets to that area. Slippage is when price may get up there but not take you out. You feel what I'm saying? Not take you out. And you still dealing with your float and drawdown. You feel what I'm saying? Some brokers can offer some type of manipulation like that to where you have to deal with little bullshit like that. You feel what I'm saying? But that just comes with the game. That's how the market makers make their money. You feel what I'm saying? That's why I said when you're coming into this trading shit, it's really you against everybody because even the brokers want you to lose. You feel what I'm saying? The brokers do not want you to keep withdrawing money. You feel what I'm saying? They want to keep taking your shit. They want you to keep losing. They want you to keep losing. So although they offer demo accounts and they offer beginner-friendly platforms for you to be able to get started with, understand that a broker is here at the end of the day to make their money. You know what I'm saying? Brokers don't trade. They use us to make their money. You know what I'm saying? The more money we lose, the more potential money that they make. You know what I'm saying? So keep that in mind. All right. ECNs, okay? ECNs is short for electronic communication networks. All right. Nothing too crazy, nothing too crazy to understand. They are just systems that help connect traders directly to the market, eliminating the need for brokers. So ain't no middleman no more. You know what I'm saying? Ain't no middleman, ain't no broker. When you can deal with an ECN, now you're literally going straight with the market. You feel what I'm saying? Certain brokers can manipulate price and give you different prices that can throw off your analysis, right? You're dealing with an ECN, everything is pure, everything is raw with the data that we're getting straight from the foreign exchange market. All right. There's no manipulating, there's no none of that. Okay. And you don't have to put your money in through a broker. Okay. They display the best available price, and traders can execute orders directly at these prices with no slippage, anything like that. Okay. ECNs offer greater market transparency, which means that once again, no manipulation or anything like that. With tighter spreads, right? Remember, the smaller the spread is, the less money that the broker makes, and the more money that we can make, right? Tighter spreads, more liquidity, right? Remember how much more liquidity is. The more liquidity is going through that market, the more money you could potentially make, right? However, ECNs can come with commissions per trade, right? So options traders know about this. You feel what I'm saying? Every single time that you pop a trade, you got to deal with commissions, right? And can be very fast paced, right? So this is a whole different ballpark when it comes to brokers versus ECNs. ECN's price, that's real deal. You feel what I'm saying? She moves and she moves with the speed way faster than regular brokers deal price. Okay. So it's not ideal for beginner traders to come in and start dealing with the ECN. So for everybody that's brand new to trade, I'm going to be putting y'all on a market maker or a broker. Okay. But once y'all start getting more advanced in y'all trading careers, you may want to slide to an ECN where you get more raw price action and be able to, you know what I mean, make a lot of money more quicker. You feel what I'm saying? But with more risk involved, slide to an ECN. Okay. For all my traders that are already trading on this call, if you want a few ECNs, just let me know. I'll slide them to you once we get up off the call. All right. Let's talk about the different sessions. This is the last little thing that we're gonna go over on today's bootcamp. Talk about the different sessions and the different times of day that you can trade. You feel what I'm saying? And the importance between each and every session. Okay. So, like I was explaining earlier, the market is open 23 hours a day, Sunday through Friday. And every day the market closes from 5 p.m. to 6 p.m. Okay. That's where the 23 hours comes into play. That 1 hour that the market is closed is from 5 p.m. to 6 p.m. Okay. And technically, the market isn't even closed, right? The market is technically, if you want to be all the way technical, it is open 24 hours a day. Okay. But us as traders, we do not have access to the market from 5 to 6. Okay. They just shut everything down so that we can't trade it. And then the market opens back up at 6. But notice how once you start trading more and you start paying attention to price, you'll notice how price will move from 5 to 6 and you'll get what's called a gap. Okay. Go over that tomorrow. All right. However, just because the market is open 23 hours a day does not mean that the market is volatile all day. Okay, there's certain times when price moves, and there's certain price when Tyson gets certain times when price can get stagnant. Okay, and it's hard to be able to make money when price is stagnant. There will be times in the day when price don't move at all. It will sit in a certain area and not do anything. Even though the market is open, she's not moving. No movement equals no money. You know what I mean? So understanding the different sessions will help you stay away from stagnant price action and will give you the best opportunities to get into the market and make some money. Okay. Starting off with New York session. Okay. New York session is my second favorite session. You feel what I'm saying? Behind London. Okay. But New York session is probably one of the most, if not the most important sessions there is. Okay. New York session is from 8 a.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. So our time of day. You know what I'm saying? Think of it like this. When is the majority of the United States money moving? You know what I'm saying? When do we get up? When the United States get up? You know what I'm saying? When we're talking about Eastern Standard Time. They get up at 8. Things get up at 8, start getting ready for work. Now people going to the gas station, you know what I mean? Got them filling up their cars and getting breakfast and doing whatever the case is. Money is moving in the money. Money is moving in the morning. You feel what I'm saying? 8 p.m. to 5, that's work time. You feel what I'm saying? So money is circulating all day, every day. This is one of the most important and active sessions in the foreign exchange market to trade. All right. This session is best to trade for major currency pairs. Who can tell me what a major currency pair is? Pop quiz. What is your major currency pair? What do your major currency pairs include? Now I gotta see who been paying attention and who just been sitting here, who just been sitting here listening to me talking, not been taking no notes. Euro USD, that's definitely an example. For sure. For sure. For sure. Euro USD ski, Euro do ski. So remember, your major currency pairs are any currency pair. Remember, and I see somebody going crazy in the chat right here with Euro, USD, Great British Pound. Those are your major pairs. I mean, I'm sorry, your major currencies, right? But remember, we're talking about pairs right now. Every single pair is of one currency against another, right? So we're talking about. There we go. That's the answer I wanted to see. Any pair with the US dollar behind it. So GBP USD, Euro USD, USD JP bar, USD CAD. Any pair that has anything to do with the US dollar will be the ideal pair to trade during New York session. That just makes sense. You know what I'm saying? New York is in the United States. It'll be best to trade the pairs that have something to do with the US dollar during the time when the US dollar money is circulating the most. That will be from 8 a.m. to 5 p.m. Eastern Standard. Okay. New York is usually divided into 3 different sessions. Okay. So New York has 3 different sessions that you can look to take advantage of. Okay. Which is the morning session, 8 a.m. to 12 p.m. That's like the first half of New York. Okay. 8 a.m. to 12 p.m. That is your most volatile time to trade. Okay. That is probably the best time to trade. That is the best time to trade when it comes to New York session, 8 a.m. to 12 p.m. Why is that the best time to trade during from 8 a.m. to 12 p.m.? Because you'll understand that, first of all, right? Got the London overlap, okay, which we're going to go over what time frames London is, okay. But once you see what time London session is, you'll understand that it overlaps. Okay? London session and New York session crash into each other like this. When both of these sessions crash, now you got double the amount of volatility inside the market. You feel what I'm saying? That is from 8 a.m. to 12 p.m. Okay. Then you have your lunch hour from 12 to 1. That's when price usually just slows the fuck down and doesn't do anything. We call 12 p.m. to 1 p.m. a no trade zone. You know what I'm saying? We do not like to trade that time at all because that's when price likes to shut up. It starts doing dumb shit. You feel what I'm saying? Think of it as lunch break. You feel what I'm saying? For anybody that's working a 9 to 5, whatever the case is. That 12 to 1, you go in at 8, that lunch session is around 12 o'clock. You feel me? That's halfway throughout your day. You do what I'm saying? So that 12 to 1 is considered the lunch session for New York, in which price just usually slows down, gets stagnant, doesn't really do too much. Okay. And then the afternoon session, which is 1 p.m. to 4 p.m. That's when price starts to slow down. You feel what I'm saying? 1 p.m. to 4 p.m. can very much still be volatile. There's news releases that like to come out at 2:30 p.m., stuff like that. So you have a lot of opportunities to make money from 1 p.m. to 4 p.m. as well, but it's not as volatile as the morning session. Okay, it's not as volatile as 8 a.m. to 12 p.m. And understanding that, like I said earlier, the market closes at 5 p.m. every day and opens back up at 6. You can see why the market will start to slow down from 1 p.m. to 4 p.m. because it closes at 5. You know what I'm saying? That opens back up at 6. The afternoon session, the closer it gets to 5, right? The less volatility you got, the less amount of opportunities you have to take a trade set up. Okay. Best time to trade once again will be New York morning session due to the London overlap. Okay, we'll go over that more in a second. But understanding that, first of all, most economic reports, news, and events related to the U.S. politics, trade, and finance are released during New York session, making it extremely volatile. Okay, so what does that mean? Saying all that to say what? Dumb that down. Any major news release, you feel what I'm saying? Anything major that comes out when it comes to a specific country or a specific currency, first of all, will never be random. There will never be a time where a random event or news release comes out and it sends price all over the place. That doesn't happen. You feel what I'm saying? Everything is calculated. It comes out at specific times throughout the day. It's your job to understand what time these specific reports, news events, etc. You know what I mean? It's your job to understand what times these different things come out so that you can trade accordingly. Okay. But understanding that if you do your research on these different reports and news events that come out during New York session, they all usually come out during the same time, 8:30. You feel what I'm saying? 8:30, or you'll get some during the PM session or the afternoon session being that 2 p.m. like I was just going over earlier. But majority will come out during that 8:30. You feel what I'm saying? So that's another reason why New York session, that morning session, gives you plenty of more opportunities to trade than any other session. Okay. It makes it extremely volatile with all these news releases. Okay. Once the London overlap is over, price actions tends to slow down, which is what I was just talking about with lunch hour. Okay. The London overlap is over with at 12. Okay. This will make more sense on the next couple slides. Okay. But remember that while New York session gives great trading opportunities, it is important to come in and plan and manage your risk wisely. You feel what I'm saying? Just because you can make a lot of money in this market don't mean that you will. Once again, everything is 100% calculated and precise. So make sure that when you're coming into New York session, if that's the session that you plan on trading, you got a game plan behind you. You feel what I'm saying? Because although it looks sweet, you'll take everything you own. You feel what I'm saying? Let's keep it pushing. Next session. Now we got Asian session, okay? Asian session is from 6 p.m. to 2 a.m., okay? So remember that New York closes at 4, the market closes at 5, okay? Then when the market opens back up at 6, that's when Asian session kicks into play. And Asian runs from 6 p.m. to 2 a.m., okay? Yes, Asian session is also known as the market open because, once again, price opens back up every day at 6 o'clock, okay? This is also known as Tokyo session, but majority call it Asian session. But this is the session when this is the first trading session of the day. Okay. And I know that may confuse you, but let me give you an idea of how the foreign exchange market time works. Okay. When it comes to when we talk about regular time, you would think that the day starts off at what, 12 o'clock? You know what I'm saying? As soon as 12:01 hits, it's a new day. Not in the foreign exchange market. The foreign exchange market every single day opens up when the market opens up, which is at 6 o'clock. So when we're talking about a new day, we'll think about it as, once again, like 12:01 being the next day. In the foreign exchange market, the next day comes when the market opens at 6 o'clock. Okay. So the next trading day will be at 6 o'clock. So your trading hours are from 6 to 6, new day, 6 to 6, new day, 6 to 6. You know what I'm saying? This is your market open. It's the first trading session of the day. Okay. The liquidity during this session usually doesn't show up until a few hours into it. Why? Because the market opens up at 6. Okay, so you won't start seeing major price movements until a couple hours down the line when we start getting a little bit deeper, when the money starts circulating a little bit more. Okay, but this session right here usually gives you the least amount of volatility. It doesn't. The session right here is the one that we usually stay away from. You know what I mean? Nothing really happens right here. The session is usually known for what's called consolidation, or in other words, stagnant price action. Price is not doing anything. It's not giving you multiple opportunities to make money in comparison to the other two sessions. Okay. But Asian session, the volatility is usually very, very thin, and around 20% of all Forex trading value happens during this session. So you can see how many people actually trade Asian. You know what I'm saying? There can be opportunities to trade, but it's very rare when you see a great opportunity to make some money. Once again, in comparison to the other two sessions that we trade. Okay. But you'll most likely see the stronger moves come from the Asian pairs, obviously, right? Because we're talking about Asian session. So USD JPY, right? Why? Because it has a Japanese yen on it, okay? Euro JPY, why? Japanese yen. Any pair that has a Japanese yen on it, AUD JPY, Aussie against the Japanese yen. Any pair that has a Japanese yen on it would be ideal to trade during this time session, 6 p.m. 2 a.m. Okay. The session is known for its calm and stable market conditions. Doesn't do too much. Okay. Asian session is not known for nothing but nothing. You know what I'm saying? Compared to other sessions, there are times when price offers good trading opportunities, but it may not offer as many trading opportunities for those seeking higher volatility. Okay. So if you're looking for that time when price is moving, you can make hella money real quick. You don't trade Asian. You trade either London, which is the next session I'm about to go over, or New York. Okay. So understand that Asian is just that stagnant session. You know, stay away from Asian. Okay. Then we talk about London. London is considered the most important session. You feel what I'm saying? Even though New York may have the most news releases behind it, New York can sometimes be the most volatile. London is considered the most important session when you talk to any Forex trader. Okay. London session comes in from 3 a.m. to 12 p.m. Now do y'all understand why I was talking about the New York overlap? Remember, New York session is from 8 a.m. to 5 p.m. London session is from 3 a.m. to 12 p.m., which means from 8 to 12 is both London and New York session. And that's why you get more volatility. That's why you see price moving a lot stronger during the first half of New York, because you have an overlap from London and New York. Okay. London kicks in right as Asian is closing down. So now y'all start to see the cycle in the foreign exchange market. It starts off with Asian session, okay, from 6 to 2. Right after that, kicks off London session from 3 to 12. You know what I'm saying? And then right after that, New York session comes in from 8 to 5. And then it repeats. New day. Asian, London, New York. Asian, London, New York. Every single day. That is the foreign exchange market clock. You feel what I'm saying? London session is from 3 a.m. to 12, kicks in right after Asian. London is usually considered the most important and active trading session, okay? Around 43% of all Forex transactions happen during London session. I mean, that's when the majority of people are trading during London. It's when the most money is circulating, okay? This session crosses with New York, which I was just going over, leading to higher liquidity and lower transaction costs or spread, okay? Y'all start to notice, right? For my traders on here, have you ever noticed that when you're trading during Asian, the spread is higher? Once you come to a volatile session like New York or London, the spread is lower. It's a reason behind it. Okay. Price likes to start trends during London and continue through New York session, give you the opportunity to catch a whole day's worth of price movement. Okay, that's personally my reason why I like to trade London, because when I like to analyze my price and I analyze my charts, when I'm trading London, I'm usually being able to put my team in position to catch a whole day's worth of movement. If I'm trading from 3 a.m. and I say, for example, I'll buy, I can hold that buy from 3 a.m. all the way to 5. You feel what I'm saying? From London all the way to New York and catch a whole day's worth of buy. You feel what I'm saying? And make a lot of fucking money. You know what I mean? But on the contrary, London session can also reverse. You feel what I'm saying? Because at the end of London session, people like to secure their profits. And if we're talking about algorithm wise and how the market really moves, London session can be manipulative. It can give out false moves. You feel what I'm saying? So London session, you can see that it can give you a lot of ways to make money. You feel what I'm saying? You can either catch the whole damn move, you can catch a reversal. Either way it goes, London session will give you the most opportunities to take advantage. Okay, this is my favorite session once again, because it deals with a lot of manipulation. It likes to throw people off. And the way that we trade as smart money traders, we base everything on manipulation. Okay, so this is why I love London session personally. Okay, the best pairs to trade during London session are obviously pairs that have something to do with the euro, the Great British Pound, right? London pairs, right? So now we're talking about GBP USD, Great British Pound against the US dollar, Euro USD, Euro against the US dollar, Euro JPY, Euro against the Japanese yen, GBP CAD, Great British Pound against the Canadian dollar, right? Anything that has the Great British Pound or the Euro on it would be the ideal pair to trade during the session, even though that's the thing about London session. It don't matter what you trade, no matter if it's a major, minor, or exotic, you feel what I'm saying? Price will go crazy during London session. This is when the most volatility is in the market. You feel what I'm saying? Doesn't matter what you're trading, you'll be able to make a lot of money during London. But the most ideal pairs to trade during this time will be pairs that have something to do with London, like the Great British Pound or the Euro. Okay. Lastly, this session is a crucial time for trading due to its high liquidity and the release of important economic data. A lot of traders prefer this session. However, beginners should be cautious of the increased volatility. Okay, so coming back to what I was just saying earlier, London is known for not a manipulation. So if you're a beginner, you might want to start off in New York because New York is known for giving the whole move. You feel what I'm saying? New York is known for starting off, giving you a buy at the bottom and riding that bitch all the way up to 5 o'clock. You feel what I'm saying? So if you want to start getting good with trends and not really dealing with manipulation, start off with New York and make your way over to London session. Okay. But a lot of people prefer London session due to the market conditions that it gives you. You feel what I'm saying? You can make a lot of money real quick. The volatilities increase, the liquidities increase. Okay. So price moves very, very fast. Depending on if you're in the right position, you can tear their ass up, make a lot of money real, real quick. Okay. This might be the last slide. Yep, this is the last slide, family. Okay. So tomorrow's session that we're going to be going over, right? Will be on fundamental analysis. We're going to actually start getting into some charts tomorrow. Okay, we're going to start getting to some charts. We want to put y'all in front of the charts. That's the intimidating thing. Everybody's scared of the charts. When you look at a chart, you get scared. You think you can't read it. It looks like a foreign language, like Spanish or some shit, right? Understand that everything looks like that when you don't know nothing about it. But once you learn it, it turns into a book. I can explain to you what anything that a chart is saying. It don't matter what it is. You know what I mean? So tomorrow we're going to start digging into charts, figuring out 2 different ways to analyze a chart, fundamental versus technical analysis, as I was going on in the beginning of this call, right? Different types of charts, right? We're talking about candlestick charts versus line charts, is that and the third. Just getting y'all introduced to a chart and learning about candlesticks, okay? Risk management, start going over how we're risking our money, different ways to risk money. We're going to start going deeper into leverage and margin, okay? I told you I will dig deep into that tomorrow. That's the move, okay? Then we're going to start talking about psychology, mindset, why mindset is so important, why you may think that the chart is the hard part when it's really not. Psychology is the hard part. You feel what I'm saying? I'm telling everybody right here, if you start getting into this trading shit and you actually start learning about how to read a chart, you'll understand that reading the chart is the easiest part of trading. It may not seem like this now, but I promise you it is. That's the easiest part of trading. Hard part comes in once you learn how to read a chart and you actually start trying to put your money behind it and you learn how to manage your money. Trading isn't about making money. It's about managing your money wisely. Okay. Remember that, because losses come with this shit. It's inevitable. How do you manage your money when you lose? Everybody always thinks about winning. There's always a yin to the yang. So we have to go over psychology. Okay. And then lastly, tomorrow we will dig into different trading platforms. I'm gonna go ahead and get y'all signed up with different brokers for MetaTrader. I want everybody to go ahead and have MetaTrader 5 downloaded tonight, so that tomorrow it can be kind of a smooth process. I'm gonna get everybody tapped in with a broker that everybody can start using and start playing with price. I'm gonna get y'all navigated through MetaTrader 5. I'm gonna show y'all the different things that y'all can do on MetaTrader 5, how to trade on it, how to make money. And then we'll wrap it up like that. You feel what I'm saying? I see the chat. Let me check the chat real quick. What time tomorrow? Same time. All right. If anybody, you know what I mean, I'll drop it in the chat just to make sure that everybody's free. But I'm pretty sure that 8 p.m. will be the same time that everybody's free. So we rock out like that and it'll be the same time. Okay. And finally, does anybody have any questions on anything that we went over? You feel what I'm saying? I felt like I was low-key rushing through it, but the reason behind that is because y'all was acting like y'all didn't have any questions. So you feel what I'm saying? I feel like I did my job. But does anybody have any questions, comments, or concerns on this first day of this boot camp for anything that we went over? Okay. For any currency pairs, we're talking about pips, we're talking about leverage and margin. We're talking about minors versus majors. You feel what I'm saying? We're talking about anything that we went over on today's call, anything that you were confused on. Now will be your time to ask that question. Or, right, if you love today's call, right, if you learned something new, if you're excited for tomorrow's call and you're starting to be more, you know what I mean, interested in the foreign exchange market after today's call, drop a 1 in the chat. You know what I mean? Let me know that this boot camp is doing this job. You know what I mean? If you're starting to understand the basics behind it, let me know.
Can you elaborate a little bit on what spread is and how, like, the different trading sessions affects that?
All right. So spread, once again, spread is the difference between the ask and the bid. So let's do this real. All right, let's do this real. What I'm gonna do is I'm gonna go to Google real quick. I see all the ones in the chat. I appreciate y'all. We're gonna do is we're gonna look at something like this. Okay, and we come to TradingView. First things first, everybody, this is TradingView. Okay, for those that are brand new. This is TradingView. This is how we analyze our charts. Y'all see this a lot on my Instagram story, or if y'all been, just tapped in with trading in general, you'll understand that this is the website that everybody uses to analyze price, figure out where they think price is going to go, and then we make our money on MetaTrader. Okay. I came here to try to show the difference between the ask and the bid, but there's no spread on here. So let me go to Google real quick. All right. I'm just find a random screenshot of a MetaTrader for. All right. We got to understand the bid and the spread. Bid and the ask, spread, how different sessions they have role in that. Okay. Slide to Google. I'm gonna find a random picture of a MT5 trade screenshot. All right. We're just trying to find somebody that took some pictures so we can just look at the. Okay, this is a good picture right here, but it's not. I wanted to be on the phone because that's what we're trading. 1 second. Matter of fact, that's fine. Just for the sake of the call, we're going to dig deeper into it tomorrow. But this is what your chart is going to look like essentially, right? When you're trading. Okay. Same thing on the phone or on the computer, same ballpark. It's going to look similar to this. The colors may be different, whatever the case is, but it's going to look exactly like this. This is what y'all see me posting all the time. This is what you see traders post all the time. This chart. Okay. This is price. Okay. Now, remember how I was talking about ask and bid when we was on that slide, and I was explaining how when you're looking at your chart and you're looking at price on MetaTrader when you're trading off of, you're always going to have two lines, right? One of them is your ask, one of them is your bid. Okay. So the spread is the difference between the ask and the bid. But the bigger the spread is, right? First of all, the bigger the difference is between the ask and the bid. More importantly, A, the more money the broker makes off the trade, and B, the harder it is for you to get in profit. Okay. So say, for example, I bought this right here. Say, for example, everybody see where my mouse is at. Say, for example, I bought right here where my mouse is at, right here, right now. You feel what I'm saying? In order for me to get in profit, the ask price, which is that blue line, right? The lowest line, has to get above my buy entry for that. You feel what I'm saying? So sometimes y'all notice how you may pop a buy, you may look on TradingView and you see, damn, price is busting, but you go look on your MetaTrader, you're not in profit yet. That's because the spread has not cleared your entry. So the deeper the spread is, or the bigger the spread is, the harder it is for you to get in profit. Same thing or vice versa for a sell. Say, for example, I pop the sell right here where my mouse is. In order for me to get in profit, the X or that red line has to get below my entry. It has to cover my entry. You feel what I'm saying? So once again, the smaller this spread is, we can get a broker that offers a very, very small spread, or we're trading in a session when that spread is smaller, it is very, very easy for us to get in profit. It is also less money on the broker's hand. We get more money out of our trade. You know what I'm saying? So when it comes to different sessions and how that plays a role in price, they slow that shit down during Asian and they increase the spread. Yeah, that's pretty much a indicator to you to stay the fuck out the market. When there's no volatility in the market, spread will increase. That's just the name of the game when it comes to how the market moves. The lower the volatility behind the market, the bigger the spread is. You feel what I'm saying? The only time that you'll notice a slightly bigger spread, but with crazy volatility, is when a news release comes out. The second of a news release, that spread increases and it goes crazy. Right after that second, comes right back to normal. You know what I'm saying? Y'all should all know that by now. You do my trader should already know that by now. But yeah, there's no real explanation for it. That's just how the algorithm moves. And the lower the volatility, the bigger the spread is. You know what I'm saying? So when we're talking about sessions that have major volatility like London and New York, you'll notice that spread gets smaller. You know what I'm saying? But try to trade right after the market opens, or right after the market opens at 6. Y'all always notice how when the market closes at 5, what does the spread do? Boom. Every single time. Every single time the market closes at 5, what does that do? Spread do. Boom. We're going into a new session. It knows the market about to slow down. Market ain't about to do shit. So that spread increases. And it goes, it slowly but surely gets smaller and smaller and smaller and smaller until London gets there. That's when the volatility kicks in. That's when the spread slows down. That makes sense, gang? That makes sense?
Yeah.
For sure. For sure. For sure. All right. Anybody else have any questions, comments, concerns, or anything we went over on this boot camp? All right, for day one. Sure. Anybody got no more questions, comments, and concerns, man? So looks like we did a great job for day one, man. If anybody wants this PowerPoint, it's definitely gonna be dropped in the chat as soon as we get up off this call. This recording will also be dropped in the chat as well. Remember, y'all will have lifetime access to all of these calls so that y'all can always come back and study them. But it was a great, good call, family. I hope that everybody was able to learn and get introduced to the market like how I wanted to. Once again, today was just really day one of just putting y'all on the basic information, giving everybody the terminology that they need. You know what I'm saying? But tomorrow we'll really start taking a deeper dive into really understanding how we making our money. You know what I'm saying? Remember that the whole goal of this boot camp is to put you guys in front of the information to help you come up with the decision on if Forex trading is something that you would like to do or not. You know what I mean? So that's the whole goal of this. You feel what I'm saying? By the end of the boot camp, I want everybody to understand, okay, is this something I want to take advantage of, or is this something that is not for me? You know what I mean? Trading isn't for everybody. But hopefully from this first day, you can start to have an understanding on what it is and if it's something that you're interested in. But once again, we still got 2 more days, a lot of information. You feel what I'm saying? So I hope everybody's tapped in. Hope everybody was taking notes too. So I'm going to be quizzing y'all throughout this boot camp. That's what I've been doing all day. You know what I mean? So I hope everybody's taking notes, being tapped in. Come check the chat. Thank you. No problem, y'all. No problem. You know what I mean? We're going to stop this recording.